is the cap? Oh, okay, found it. Nice. We gotta go live with the cruise cap, no? Okay, what's up, everyone? How are you doing? Welcome to today's live stream, and we're gonna cover Elliott Waves. So let me pop out the chat. Let me get sorted. I just came back from the gym, so I am home for only a few minutes, so quickly had to set some stuff up here and get ourselves ready for hopefully some action on the chart. Welcome, everyone. Good to have you here. New day, new live stream. And yeah, so what we're going to do is cover a couple of Elliott Wave scenarios. If you were awake earlier this morning, Central European time zone, you may have seen a video that I posted, and I got like quite a lot of questions as people I don't really think understand that probabilities per time frame can be different. So that is something that I want to focus on in the live stream. So therefore, I was like, you know what? Let me just immediately plan the live stream. So we're going to cover Elliott Waves live. So that's why the video of this morning is off, because it's no value anymore, because I do the live stream now and I'll explain the same stuff plus more. And then I will also answer the question how Elliott Waves work on different time frames, because I can feel the confusion between, well, locally, because that was the video. The video locally was like, well, we're still looking for price to take out the high. And of course, you know, as we are moving to the upside, potentially you have 92K coming as well. And then you had the people, but wait, on the 8-hour time frame, we're looking potentially for a continuation of a bigger corrective structure. So how does this work? I'll explain. That's why the live stream is here as well, right? So Stavros, welcome. Jeremy, by the way, welcome to Silver. And make sure to fill in the form here. But Jeremy, good to see you here. Thanks for joining. Stavros, the next 6 weeks will be epic. Good luck, and I see you at the new all-time high. Potentially, yeah. So 6 weeks from a time perspective. Would it be if you do move up impulsively? 6 weeks. You would need to have your 1, 2, get a 1, 2, 3, 4, 5, 4, 5. I don't really at the moment see if you would consider a bullish scenario, I don't see a straight line to the upside. What I would prefer to see from a psychology and wave point of view would be a 5-wave structure. Hold it somewhere around 102 or 105 where the FOMO hits. People start buying, thinking all-time high. Drag it down for a big correction and then move up. Alternatively, you continue to create like we had at 49K. You continue like grinding like this, forming a couple of 1-2s. No one knows what's going on because they don't know Elliott Waves. And you stay in the range for a long time. And then out of nowhere, you get that explosion. But we're going to cover the stuff that we are looking at. Right? So we're going to cover everything. Mr. Moon Morning, Ripple. I'm in a short right now. Trade safe. All I can say is the 886 is touched. So one expects the high here to be taken. Paul welcome. Engine Tour, what's up, Maureen? Mupi, Abdul. Bro, then where's your buddy? You said gym. Yeah, I'm working on that. I am apparently, so I did the like the test where they check all your like your muscle mass, your fat, your this and that, and all of that stuff. It's in the gym. And for my posture, I am very well built. I have a very low fat percentage and a high muscle percentage. However, I want to get bigger. I need to eat more. That's my main thing. He says, you just got to do what you got to do. You just got to make sure you eat 3,000 calories a day, 140, 150 grams of protein. a day and, you know, have the carbs and blah, blah, and then it will happen. But I need to get to the eating stuff and continue the gym. Jackson, what's up? The quest for the hat in the theaters, May 1st. Yeah, I know. I lost, it was in my gym bag. I forgot about it. Mohammed, welcome. Amira, Kali, family man, welcome to the team, by the way. Welcome to the team. Yeah, I saw you joining recently. I saw you in the list. Dimitri, thank you for your content. Welcome. Good to have you here. Just found your channel a few days ago while searching for Elliott Wave analysis. Well, thanks for joining. Welcome. And YouTube doing its thing. So I appreciate you hanging out here during the live stream. And yeah, we're going to cover some waves live, answer some questions and all that stuff. Did you delete the short video today? Yeah, because I'm going to cover everything here anyway. And I got so many questions after the video as well, because I said the probabilities are higher to take out the local high and look for some more upside. And people were like, but wait, on the 8-hour time frame, we're looking for a bigger corrective structure. How does that work? And I was like, you know what? I'm just going to go live. And that's what I did. So I prefer to just go live. And then the video of this morning is private because it's not useful, because the live stream is going to cover all of this stuff. It makes a lot more sense. So that's why. Yeah, people talk more and more about the M2. Yeah, I heard about it. Don't trade with emotion. Trade with a plan. Ripple. Right? Trade with a plan. Because looking like we are going up is not a trading plan, right? We also just took out the high, by the way, which means that the 886 probabilities have played out. But looking like we're going up, right? You need a plan. No emotion, need a plan. Talking, by the way, about a plan, we're building a platform to help you build a plan, which is called Hexaplan. So more about that maybe later. What's up, Miha Mania? Welcome. Good to have you here, Legendario. Do you look at altcoins separate? Yeah, I should do some alts again in individual videos as well. But for now, in this stream, most likely focus on the biddy. Focus on the biddy. So cool, the high is broken. So the probabilities played out. You watched the morning video. Those probabilities also played out because now we took the high. But you have seen the thumbnail. And the thumbnail, FYI, is this area of support, 85 to 86. That is what the red box is with support. That's that area there. 92K is the blue box above. Now let's then cover a couple of Elliott Wave scenarios, shall we? We will focus on, let me go to the 8-hour. We're going to start on the 8-hour and then move down, which also gives me the opportunity, by the way, to explain how probabilities in Elliott Waves work and how probabilities in Elliott Waves change accordingly. So we are live now for 12 minutes. That's fine. Okay, so let's start with the questions I got in the beginning. And then it has to do with the update anyway, because we are going to cover the 8-hour as well as the local move to the upside, right? Cool. Now, if you're on a high time frame, in this case, we are on an 8-hour time frame, right? Whatever you find high, but let's say the 8-hour is in this case the higher time frame. Probabilities on an 8-hour time frame could, for example, be higher to continue a range. But on a 15-minute time frame, they can be higher to move towards the upside, right? So on an 8-hour, I should say this differently. On an 8-hour time frame, I should do this different. Wait. We're going to do this here. Okay, cool. Let's just go here. Existing previous price action. I don't want to mess with your head once I start covering the real price action. So on a 8-hour time frame, your probabilities, right, can be higher to look for another low. Okay. So you're looking for downside, but price never moves in a straight line. It will go up before it then comes down after. So on a higher time frame, in this case the 8-hour, when we were observing this range, right, probabilities are higher to move to the downside. But then here I might make a video, and in the 1-hour time frame, when I analyze this biddy here, I'm like, well, probabilities are higher to move up, even though on an 8-hour your probabilities are higher to still move down. So each time frame has its own probabilities, right? And probabilities change first on lower time frames. So if we would not take out this low, right? If this was the low, then first the probabilities change on the 1 hour. We're bullish on the 1 hour. Cool. And then as we get price action and then a 3-wave corrective retracement, which we didn't get, but you know, then this is slowly where the probabilities then change on a 4 hour and then on an 8 hour and then on the daily and then on a weekly, right? So the probabilities always change first on the lowest time frames and then they can change on the higher time frames. So on a weekly time frame, we're moving to the downside. We're in a strong downtrend. Now, I'm not going to lie, this was definitely reversal zone. As per my video that I made here, I very much explained why probabilities increased, that a bottom was coming. You can check that one out. But you don't yet know if this is like your bottom. You could have done this. However, on a local time frame, probabilities increased on the 1 hour, right, to move up, on the 4 hour to move up. And then you get the quick move up. Now, at this moment in time, on a daily time frame, you're looking for a 5-wave structure. On the weekly, you're not yet sure if this is a flat, right, being an A, B, or maybe a C, that's your bearish scenario, or if this move to the upside is actually going to be your wave 1, and you look for continuation, right? But then as you get the range, the probabilities on the weekly change for upside. This is where the weekly probability started changing. This is where the 1 hour changed, right? This is where the daily started to change, okay? So on a low time frame, things always change first. And it is possible that on a daily time frame, right, just like over here, you can remember the videos that I made when price was ranging here in December, probabilities were higher to look at a couple of 4-5s. In other words, you're looking for price to retrace to the downside. But on a 1 hour time frame, 15-minute time frame, you still have these moves up. And then, yeah, probabilities are higher to move towards the upside, right? Probabilities are higher to move to the upside, even though on a high time frame, you're looking for a retracement. So in other words, those type of probabilities, right, one has to view them as separate probabilities. You can have a very big structure, which is corrective, like a zigzag, but you're still going to be looking for 15-minute probabilities and 1 hour probabilities to move up, right? And then based on that structure, probabilities may change on a higher time frame. Anyway, let's then jump into the where's my bullish scenario? No. Oh wait, here it is. Let's start with this one, because everyone loves the bulls at the moment, no? So let's then cover it. And according to local probabilities, I will also explain how probabilities may change depending on future price action, okay? I just want to start with the bullish scenario, just so that I have this one covered and that it is out of the way. And that everyone knows what the probabilities are at the moment for this scenario. Just making sure that we put that one in. There you go. Okay, so if you have seen the updates that we were making, if people are new, maybe not, but also in this video, right, once again, I explained your probabilities are higher to move up, even if you don't count at all. You don't need to know Elliott waves in detail to understand probabilities are higher to move to the upside based on this structure. And you don't have to count the structure. You just need to watch this video where I explain it, which in a nutshell means you had a grind to begin with, you get a quick move down, but there's no strong continuation. You're going to get, again, a grind, a slow structure. And this is exactly what you want to see, increasing probabilities to get a move back up. Now, what is that move back up going to be? Yeah, if you don't count accurately, of course, you might not know, but at least we have a couple of scenarios. So your bullish scenario, right? The people that talk about the low is in, we go to all-time highs, see you in, for example, in 6 weeks, right? That sort of stuff. What are the chances, right? Never say never. But let me put some additional stuff on the chart. Some people count a flat here, right? As an ABC, where this is an ending diagonal. So you have a wave 1, 2, 3, 4, 5. That's your wave C. You have wave A, wave B, and then a wave C. Why are probabilities low for a ABC flat? Well, your wave C is over twice the length in time compared to your A plus B, which is not what you want to see. Now, time is never an invalidation, but it's also not a confirmation, right? But it adds or removes probabilities from scenarios, and a wave C that is twice the length of A plus B is not what you like to see. Alternatively, there is the WXY XZ count. By all means, the WXY XZ is a valid corrective structure, and one can definitely see a potential WXY XZ in this structure to the downside, which is a triple zigzag, by the way, ABC, X, ABC. Should actually put it there. And then you have your X and then another ABC to the downside. However, if you would read the theory on Elliott waves and study Elliott waves, you will very quickly learn that a WXY XZ is a rare corrective structure. And yeah, I can't make it more beautiful than it is. It can be a WXY XZ, right? Can be a flat. Time is not an invalidation. But from a probabilities perspective, it's difficult to give it the highest probabilities, right? Which therefore also means that the probabilities are not really on the side to have this as the end of a correction. Now, mind you, that it doesn't mean you need to get another low, because you can also have sideways corrective structures like a WXY, right? And wave Y doesn't need to take out the low of your W, right? So that makes it difficult to really give very bullish scenarios a higher probability with the current price action. Also, this wave 2 retraced to the 0.236 Fibonacci taken from the start to the end of wave 1, which is a very rare target for a wave 2. Wave 2s are commonly deep corrective structures, and even if a wave 2 is shallow, you preferably like to see it retrace to a 0.382 Fibonacci, which is generally regarded as a minimum retracement level for a wave 2, which is in touch. So it affects the probabilities. Now, doesn't mean it's impossible. I've seen it twice before. One time was when the ETF low was made. So you had the ETF, Bitcoin ETF was launched, price moved to the downside, created a low. I don't know the exact price, somewhere around 39 or I believe 39K. And then it moved to the upside and it started ranging sideways. If you go back to that moment, right, then you will see that that first range did not touch the 0.382, which is this one over here at around 42. That range was very shallow. Another range that was very shallow is this one here, which was the 18th of June 2023. So those are two examples that I have seen in, I suppose, in real life, where wave 2 is incredibly shallow and you do get a wave 3 afterwards. But it's tricky to give it the highest probabilities because it's just Elliott waves. We have to be aware of probabilities. Now, how do probabilities change for the bulls? Well, that's what you see here. And after wave 5, we want a correction. But let me take it step by step. So, first of all, this has to be a wave 2. Wave 2 cannot be a triangle. So in this structure, we have to count a WXY. It's a sideways complex structure on the lower time frames, which is a flat X, double zigzag, Y, zigzag. Your wave Y, compared to your wave W, is shorter than the 0.382 Fib time. I might go very specific for people that are not really that much, like, don't go in detail too often, but let me just go to the lower time frame. So if we want to count this as a W is a flat, then you have X and then Y, right? Your wave X is then a double zigzag, right? Y itself is a zigzag. W is a flat, right? Your wave Y is very short in time, and now I can take a more accurate Fib time from the start of W to the end of W, to the end of your wave X. And you can see wave Y ended before the 0.382, which is not really common, right? Of course, it's a very sideways complex structure, but you cannot count a triangle in a wave 2, so we have to count that differently. And what we then want to see is continuation. 1, 2, 3, 4, 5. A 5-wave structure. Now, personally, I am not of the opinion that this move is going to take all-time high. I don't really see that happen. It would be too easy. Would be too easy. From an trading psychology, market maker type of point of view, like just moving straight up to all-time highs, it feels like too easy. Everyone's going to be in profit again. So what I would prefer to see is, yes, sure, you need a 5-wave structure, by the way, coming off the low. Move it up to resistance here around 102, maybe even reach 105, but do not take out the high. This is your FOMO zone, right? This is where everyone will be, oh, there we go, 300K next, 500K next, whatever, buy, 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 buy. Instead, what I would love to see is price creating a lower high and then get a sharp and deep, quick corrective structure, right? So on a high amount of volume, very quick, very scary, preferably a bit deep as well to scare off people just thinking, oh, damn, it's a lower high, right? It's a lower high and down we go. Now, once you get 5 moves, however, you're not yet finished. You would still look for a 3-wave corrective structure. Now, if you follow the channel, I update every day. I post a video every day, at least as long as Bitcoin is doing something, which usually is most of the days. And we will be observing a move to the downside as well. Right? So you want a corrective structure like a zigzag, right? Or a flat A, B, and then a very quick wave C to the downside, scare everyone, and then eventually continue towards the upside. This move is going to change probabilities in favor of the bulls. That's the one that is very, very important. Okay. So besides a 5-wave move up, you need a 3-wave move down. Without a 3, if this becomes an impulse down, 1, 2, 3, 4, 5, you look for a correction and another leg down. You might just take the low as well. Right? Remember, previous range. This is a very nice impulse to the upside. 1, 2, 1, 2, 3, 4, 5, 4, 5. Fits all the rules, all the guidelines. Wave 3, highest amount of volume, most extended as well. Start with a bit of a grind, quick move up, end with a bit of a grind, get a reversal. But this was not a wave 1, alternatively wave A. But this was not a 1. This move down is not a nice 3-wave slow corrective structure, right? And move back up. Look how steep and how sharp it is. Supported by bearish CVDs. So you don't want to be in the scenario where price gets a pretty good move to the upside, creates a lower high. People probably be buying here. And then you drag it down, take out the low once more, and then everyone gets stopped out. Right? So don't let the emotion take control of your trading. No? So this is what the bulls want to see. And this wave 2 possibly is finished over here. You just want to see a 1, 2, 1, 2, 3, 4, 5, 4, 5. In other words, impulsive moves towards the upside. Price is now moving above the previous level, 88.8K. Next level of resistance, I don't really expect too much here, to be honest, but 90.3K. After 90.3K, we are at 92K. 92K can be interesting to finish a 3, start a 4, get a 5, another 4, and another 5. Alternatively, this wave 3 moves to 96, then you get a 4, 5, 4, 5, and you end around 102. Right, that is for the bulls. After the impulse, you need a 3-wave correction down, right? Not an impulse down. Okay. Support, by the way, here is 85 to 86.1. And that is just if price can make it down there, which was according to my morning update as well, because this range might already be your little wave 2. So yeah, no guarantee you get down there, but this is for the bulls. Okay. So what are the probabilities for the bulls? Well, from an Elliott Wave point of view, at the moment, probabilities are not yet higher for just straight continuation to the upside, new all-time highs, and, you know, in no time and never looking back. ABC flat, wave C is twice the length, WXYXZ is a rare corrective structure. If the probabilities change, you will be the first to know. And of course, one can easily long, even if you look for bigger corrective structures, right? Which I will highlight right now. So, oh, that's with regards to the bulls. Yeah, I am not a perma bear, by the way, or a perma bull. I just trade price action. And I'm very, very strict on Elliott Wave rules and guidelines and the probabilities. And yeah, WXYXZ is rare. Wave C, that's very long in time, is very rare. Wave 2 going to a 0.236 is very rare. I mean, you do the calculation with probabilities. How do probabilities change? Get a 5-wave move up, get a 3-wave retracement. That is where probabilities change for the bulls. Okay. Or, of course, you just do a straight line up. But, I mean, I'm in a long, not going to lie. And then we're happy. Okay, let's cover the other scenarios as well. Because for the bullish scenario, there's also bearish options. Even in the bearish options, however, we were looking for price to move up. So that is how probabilities on a higher time frame can be higher to look for bigger corrective structures while locally still playing the long side, right? You look for price to move up. Even in bearish scenarios, we were looking for price to move towards the upside, right? And then depending on how price is forming on the lower time frames, we will know how to manage the trade, right? Potentially take some profits and look for new opportunities. So what you see on my chart here is a double zigzag. So here you have ABC, that's your W, X, and a wave Y. Wave A is an expanding diagonal, which by itself is a rare structure, interestingly. Wave X is a complex structure, WXY, which means this has to be a zigzag ABC. Wave A, wave B, wave C. The 0.236 would be better for a B compared to a wave 2. But then you still want a wave C to the upside, which means a 5-wave structure. 1, 2, 3, 4, 5. 92K, 96K, no problem. As long as you don't touch 98.8. That's the invalidation for this scenario. So in other words, if bulls can move it up, right, impulsively and touch 98.9K, it adds probabilities to the bulls. Now, after a wave X, you look for a zigzag down, ABC and wave Y, target area 54.5K. If wave X would finish at 92-ish, if, however, price moves up to 96, your target area is going to be a little bit higher, 65, right, to 58, okay? Now, you do need a 3-wave move up here. So this has to become an ABC, not a 5-wave structure. Right? This is what you want to see locally in the bearish scenario. This has to be a 3-wave structure. Wave A, wave B, wave C. Most common target for C is up here, 94.6, 98.4. 1, 2, 3, 4, 5. In confluence with the target area, around 96 as well, right? 95.5, 96.6K. So we have some additional resistance there. An alternative target, which is a bit more rare for C's, is what you see here, the 618s. However, if a wave B is a triangle, and there is a way to count this as a triangle, right? A, B, C, D, E. The issue here is a little bit that wave D is complex, has to be a double zigzag, which is not very common for a D, but you can count an A, B, C, D, E in here as potential. Then the common C target would be the 618s. However, the only resistance I have there is the 90.3K level. I don't really classify that as a high probability turnaround level at the moment. I prefer the boxes, like the low here was made on one of my boxes. Generally, they're very nicely respected as well. I don't really have anything else than just a point of control at 90.3. So I prefer seeing a bigger C in that case. But you need an ABC in a bearish scenario. But if you compare an ABC zigzag with the bullish scenario, which is an impulse, the only difference is that in an impulse, you get an additional 4-5. That's the only difference between the two. All right. Let me get the other one up. So you can see wave 3 and C is the same top. It's what happens after that impacts probabilities for it being an impulse, because after a 3, you need a 4. After C, you expect a bigger move back towards the downside. But in the short term, you preferably see price moving up. And now that price moved above the highs at 88.8. Did we close something there? 15-minute candle closed. All right, and we start pushing a little bit now. It would be nice to see price move to the point of control. Don't expect too much there, maybe a bit of a reaction, but I would like the boxes to be touched if price can make it. What's the volume? I gotta say, volume is not staggering yet. Huh? 1, 2, 3, 4, 5. Now maybe your wave 2 is not yet finished. We'll get to the detail later. Okay, back to the 8-hour time frame. So even in the bearish scenario, you were looking for price to move towards the upside, right? So the bias is for price to move up. Doesn't matter if you're looking at a finished move and you look for all-time highs, or if you're looking at bigger corrective structures, the bias was still up. Probabilities were still higher to move up. Here's another one. This might look a little bit more complex. Hey, oh, by the way, this is a great opportunity for me to say that I had the amazing opportunity to talk to Crypto Princess. Oops, I wasn't subscribed yet because I have only seen one video, which is the one from Alex, which was great in preparation of my interview, which is planned for Thursday. So make sure to be there. You'll learn a lot about my story, my background, how it's going. I am a big chatterbox, in case you didn't notice. So the questions are short, but the answers are very long, and you'll get a lot of information about me as well. So make sure to check out the channel. If one of the mods will be so free and kind to share her channel in the chat, then yeah. Feel free to watch it together with me in 2 days, okay? In 2 days. It's going to go live. It's in Premiere now. Let me get the chat back on my screen. So thanks, Crypto Princess, again for inviting me to your, I suppose, like it's like a podcast type of channel. She interviews people. So let's cover this scenario here before I go back into the chat. So we have a zigzag here, wave A, wave B, wave C. Wave A is a diagonal. Wave B preferably is a bigger 3-wave corrective structure. Wave W has to be a zigzag again. So there you go. You need an A, B, C, right? On the 4-hour time frame. Once C is finished, you want a deeper corrective structure. That's the difference with your bullish scenario. You need a 4 and another 5. If you get a C and a bigger move down, that's bearish, right? So that is what you want to see here. Bigger move down. Want to see here, W, X, Y, finish B, move down. This one is irrelevant now. I don't like this one. So on a 8-hour time frame, it's quite tricky to give the highest probabilities at the moment to the bulls. Even though I am happy in my longs, right? Probabilities were higher to move up in both a bearish and a bullish scenario. If you've been keeping an eye on the channel and also watched this video over here, you will know. But from a probability perspective, just purely Elliott waves, having a W, X, Y, X, Z as a finished structure at the low is very rare and can't get the highest probabilities unless other scenarios start failing. Which in other words means for this bigger corrective structure, you need price to touch 98.9, significantly lowest probabilities for this. For this corrective structure, you want this to be at least a 5-wave. This has to be a 5-wave structure. 1, 2, 3, 4, 5. Get a 3-wave retracement, and then you want to start wave 3. Don't want to see A, B, C, and then go back down. So that is how this one might actually change. Let me make this one a little clearer. So, all right. So a wave B can still be a zigzag. 1, 2, 3, 4, 5. Correction. 1, 2, 3, 4, 5. B, down. What do bulls want to see? A corrective move, continuation. Bears want to see this arrow needs to be an impulse. So we're just planning ahead in time. But that is how probabilities change, right? Is the structure impulsive or is the structure corrective? No? So we'll just take it as it comes. At the moment, however, on an 8-hour time frame, it's not yet highest probabilities for just plain sailing and straight continuation, and that's it. And on a more, I suppose, 4-hour time frame, we're looking for price to move up. I mean that didn't change. So either look for A, B, C. Alternatively, you're not that one. That's the other one. I'll cover that in a second. Or you have 1, 2, 3, 4, 5. The one you just saw, that's a one that I covered. Jenny, actually, it's not even my scenario, but Jenny was talking in Telegram. I'm not sure if Jenny is here, but Jenny was here or was in Telegram earlier, and she was like, "Yo, is there a way to count an impulse here? 1, 2, 3, triangle 4, and a wave 5?" And I was like, "Well, let me just have a look, right? Let me have a look. It's not great, okay? It's not great because." This has to be a wave 4, which of course is incredibly deep. You don't want a wave 4 to touch the 618, which lowers probabilities for it to be a 4, unless it is a diagonal, then it is fine. But in order for this to be an impulsive count, you need to count this as wave 2. This is your wave 4. So your wave 4 is big in time compared to your wave 2. So you take a fib time from the start to the end of 2 to the end of 3. Toggle on the 4 and you'll see that this low is made way behind the 6 fib time, which lowers probabilities for those two to be related, for it to be a 2 and a 4. But that's the only way to avoid wave 4 to touch the 618. Because if you would put wave 2 here and wave 1 there, then it touches the 618, which basically invalidates a wave 4 and an impulse. So that is why this scenario, I still had it in my folders, but it doesn't really have the highest probabilities due to the start. But it is a fun idea nonetheless, and one that I took some time to check it out at least. So, hey, Jenny is there. So yeah, I think it's a great idea. It's not really something that I found myself or really thought of myself due to the structure, but it is not a invalid scenario. Yes, time of 4 is very long, right? Your 4 is deep. Even if you do touch a 618 officially following Elliott waves, it's not an invalidation. But we generally use it as an invalidation because it is, I've never seen it. Even Bob Prechter has never seen it. So there's no invalidations counting it like this. But from a probability perspective, 4 versus 2, how deep 4 is, it's not yet the highest probabilities, but one can at least have it. So Jenny is here. Jenny in the chat. Thanks, Jenny, for sharing your idea, because I think it is a very good idea as well. You got to think out of the box. It's very easy to do what everyone else is doing and think what everyone else is thinking, but it's really, really nice to see you just think out of the box, go a different route, and be like, hey, what about this, right? And it's a scenario I still have in my folder because there's no invalidation, right? There's no invalidation. Okay, how is volume doing? Volume is increasing as price is currently moving towards the upside. Okay. Anything else that I want to say? No, I guess I'll just summarize now, and then we go into chatting and Q&A, and I'll be in the chat answering your questions. So on the higher time frame, The probabilities for bull and bearish scenarios were higher to see a move towards the upside as per previous content. And of course, we had a first structure up and now we just extend that first structure, but that's fine. Probabilities were higher to move up anyway. In the bullish scenario, you need to end something here, which either then is your WXYXZ, right? Or possibly an ABC flat. Wave C is very long, WXYXZ is very rare. If I would finish, right, if that turns out to be the end, I would probably go into a WXY route instead of WXYXZ. Maybe. It's very rare. Well, let's see. It's made before the 382. So a WXYXZ is a very rare structure. Wave C being twice the length of A plus B, very rare. So in other words, probabilities for the bulls are not yet the highest on the higher time frame. Now, how do probabilities change? Well, we were looking for a move up anyway. You want it to continue as you want to see an impulse. 1, 2, 3, 4, a 5-wave structure. 1, 2, 1, 2, 3, 4, 5, 4, 5. After wave 5 is finished, which preferably does not take out the all-time high, just purely from a psychology perspective, in my opinion, it would be too easy to just move up to all-time highs and that's it, right? People will be buying into this right now, right? They see price moving up. They're probably afraid I didn't buy at the low. Price is now moving to the upside. I got to be part of it. The higher price goes, the more emotion. And what I would like to see is for people that trade based on emotion, drag it down. So in this case, preferably your wave 5 is finishing. What do I have? Where I have a daily at 98. So either at like 96, 98, maybe even higher, 102, 105, no problem, right? This is your emotional area, no? And then after a 5 is finished, drag it down. Get a nice deep corrective structure, make people very scared, and then go back up. Right? The move to the downside has to be a 3-wave corrective structure. It's not allowed to be a 5-wave. It has to be a 3-wave structure. So that is something we will be keeping an eye on. Right? So that is then when probabilities change for the bulls as well. Right? So get a 5-wave, 1, 2, 1, 2, 3, 4, 5, 4, 5. Finish that, get a 3-wave down that's confirmed, and then you move it back up. So it's a scenario we are tracking, and we are happy in our longs. Bearish scenarios. This one is invalidated if you touch 98.8K or 98.9K. It's 876. Double zigzag, WXY. This move up has to be a 3-wave structure, A, B, C. You could also get a flat in here, by the way. A, B, C. But I don't really like the flat too much. And then you have the zigzag, which is also a bearish A, B, C. Wave B has to be a 3-wave structure. So either this becomes a WXY, ABC, correction, ABC, or it becomes a 5, 3, a 5. Preferably your wave A doesn't go too high in that case. So that's again something that we can keep an eye on, which might give probabilities to the bulls. So preferably your wave A does not move beyond a golden pocket. If your first move up is going to go to 101.8, that's not great for this scenario, right? So it lowers the probabilities, gives more probabilities to bulls in that case. Yeah? So we just take it as it comes. And on the 4-hour, let me have a quick look here. See what's up. Yeah, not really looking for any flats. Looks more like a new wave. Bit of volume. So on the 4-hour, this is your ABC. Alternative target is almost touched, the 618s. If wave B is a triangle, the common target for C is here. You can count it as a triangle, but I'm not a big fan of triangles, so I prefer just keeping an eye on this, to be honest. Wave 2 can be in. That's no problem. It's just a scenario where you look for continuation up. Yep. And then your impulse, not that one. I should remove that one. Where's the bullish? And the bullish scenario is of course covered. So yeah. Also in my trading, I am long. I am not considering shorts at the moment. There's no sign of weakness. I always want one of my levels to be hit, and then it takes a couple of hours before I consider moving into an opposite direction. So, you know, the highs here didn't hold. Next area is 90, then it's 92, 93, then it is 96, then it is 102, etc. So, you know, I need one of the levels to eventually be touched, and then just create enough structure for me to get information. And then based on the new info, I will either go long again or compound, or I'll move into a potential short. But at the moment, there is no sign of weakness. Cool. The bearish count locally would be a oh, I wonder if I oh, wait. No, not that one. Ah, yeah. I suppose a quote-unquote bearish count locally, unrelated to if this is an ABC. Is this. However, you now have the highest volume in a potential 5, if you would count a 1, 2, 3, 4, 5 here, which is not common. Preferably your wave 3 has the highest volume, not your wave 5. What you actually like to see is 1, 2, 3, 4, 5, highest volume in 3, then make a new high, but on lower volume. At the moment, we have an increased amount of volume. This is a higher high on the volume on the 15-minute. So yeah, preferably this is not a 1, 2, 3, 4, 5. But yeah. So we'll just be observing, past the highs, take it level by level. No emotion, don't FOMO. Right? If you're not positioned, just wait for a new opportunity. If you are a trader, you shouldn't really care about where price is, meaning what's the price. Right? The volume indicator is just called vol. It's the standard volume indicator. Here it's just volume. If you go to indicators and volume, you'll find it. But yeah, if you're not in any positions, or you know what, it doesn't matter where price is. There's always a new opportunity, right? It doesn't matter if you're at all-time high or if you're at all-time low. If you're at 50K or 150K, if you are a trader, meaning you go in and out the market, you just take your bits and pieces every day or every week or every month, right? Depending on the trader you are. And then just don't care. On my personal trading window, I do not have price on the side and I don't have time on the bottom. I don't care about the date. I don't care about the price. I just care about what I see here. And that's how I make my decision. I don't want to be influenced by price, right? Oh, we're at 90K. I mean, who cares? We're at 90K, right? It doesn't matter. Unless you use price levels as like a round number, can be an area of resistance. Oh, we're at 90K, that's resistance. But in my case, I don't. And the boxes, the levels in my boxes here, right? There's resistances and supports in the boxes. But I find these levels in a way where I don't need the price. I don't care about the price of the levels. I just care about the levels themselves, and I create an area around it. So I might actually be able to show you my trading window. Wait, let me just show you. Let me just show you my trading window. There we go. We good? We good. Blop. There you go. How boring it can be. Welcome, everyone. This is my trading window. No price, no time, just the chart, candles. Time here is just counting down. That's the candle, right? And then I just have my folders, targets, trade examples, right? That's like just like keeping examples of previous trades, positions, trade categories. That's like your A, your B, your C, and the trading plan. So yeah, very boring, right? No colors, no time, no price. So do you leave this side? Yes, please. So yeah. So yeah. Also with regards to new long positions, I'm only interested if price actually moves into supports. So if this does turn out into a 5-waver of some sort, and you know, first area of support for me is 86.85, and first area of resistance is now 90.3, and then it is going to be 92.93, and then 96.97. To the downside, it's 85.86, and if you do take out this low at 83.9, that would be quite bearish, and then you'd probably be looking for 78.77. There is some levels like below this box, but if you take out this low, I would generally expect a deeper retracement. So okay, there you go. Let's keep the point of control on. Which one is it? And yeah, please don't FOMO in, right? Like, wait for your areas of support to be touched or resistance, etc., and you know, make trade a plan, right? Trade a plan. Okay. That being said, let me have a look at chat, right? So we started the analysis very quick. Elliott Wave analysis, like 12 minutes or something. Now Q&A. Not too much liquidity. Took most of it. Yeah, it's interesting, but I don't really have interest to short in no. I'm a trader that also doesn't snipe highs or snipe lows. I always need time to enter my positions. You'll rarely ever see me snipe exact highs and exact lows. I do like to counter trade impulses. Right, so wait, oh yeah, this is the one I used in my video. So I went long here, and it's not like sniping the low, but the reason I went long here is this video. I don't, without counting, it's like we have the grind, quick move down, and we start moving sideways again, right? You can see the curvature of price as well. It slows down, volume is slowing down as well, right? So you have volume coming in, volume slows down, chart starts to move sideways. We had a support box here as well. That's the long. So I mean, if that counts as sniping, then I suppose sometimes I do. But generally, when, for example, here, price moves to the downside in a high amount of volume, I generally wait a little bit, right? So I just give it time to develop, create a bit of a bounce. So I don't mind not being part of the first move. So when price made the 49K low, which is here, so I am not part of this here, right? I join later when on the lower time frames we get a nice 3-wave corrective structure, right? That's where I join. I join in the range. This range down here, very clear 3-wave structure, right? Move down, move sideways, move down, and then what does price do, right? Almost takes out the high. I'm actually not sure anymore if it took or didn't, but the fact it retraces so high to the previous candle here confirms that whatever is forming here is corrective. In other words, the moment you go back this high, whatever happens here is just long, right? And then you look for price to take out this high as a minimum. I had a resistance box here. You can go back to the videos at like 24th of August. And hit the box, and yeah, of course, that's a profit-taking area, right? So also here, price moved down on a high amount of volume. Highest volume is in the low. I don't enter at the low. I give price a little bit of time to give me more of a structure. Look here. 3-wave up or down, sorry. Moves back up, takes the high. You look for price to take the next high and then observe what price does. So, you know, it takes a little bit of time for me to get confidence in my stuff. Same with shorts. I'm not interested to short here. I don't see any clear signs of weakness. And if price would move down, then it is very close to support. If price would lose support, interesting, right? If price hits resistance and it forms a 5-wave move down and a corrective move up, I might be interested. Maybe some bearish CVDs. But yeah, I'm a very patient trader. What's up, Milo? Cherry, Hexaplan. Hexaplan is a platform that Jeroen and I, so Jeroen is here. Maybe he spoke about it in the chat, I'm not sure. But thanks, Jeroen and Mark. But Hexaplan is a platform that we are soft launching soon. So people had the opportunity to register, and the first 50 get invited to to test the back end of the platform. And the goal is to help people build a plan according to 6 steps, which I always talk about in my content, which you can also find in the educational playlists. And why is this link, Jeroen? I don't want to, you'll be redirected. What is this? Bitly preview? Is this new? I've never had this before. Usually I just go straight to the playlist. Might be new. But anyway, if you click there, you go to the playlist, and then here is 6 steps to becoming a profitable trader. I swear, like, you want to be long-term profitable, build a plan. And this will help you. But based on the questions and replies and DMs, we decided to make it a whole platform. So a platform that helps you develop a plan step by step, and also journaling, analytics, and all of the good stuff. So we're working on that in the background, but the soft launch is probably going to be this week by the looks of it, so that 50 people can test it. And yeah, people were able to fill in a form last week. It was posted in Discord, Telegram, and I mentioned it once during a live stream. And yeah, there's a lot of replies. Let's just say it's way above 50. It's more than we expected. So this feels like a trap to the upside. Yeah, gotta be safe, right? Gotta be safe. So I mean, earlier today in silver. So when I look at my accounts, I would like a retracement. This is a very, very, very shallow retracement compared to the move up, right? Especially if you would attempt counting this as a diagonal. Preferably after a diagonal, you get a deep corrective structure and not a shallow one, right? It's just diagonal stuff, because a diagonal, right? After a diagonal, the reason why it's just in the theory, the reason why. The theory says that after a diagonal, price corrects back to the origin of the diagonal, which tends to be close to the low. For a leading diagonal, that would be a 786, 886 golden pocket retracement. For an ending diagonal, right? If this is a wave C or a wave 5, you expect price to just take out the beginning of the ending diagonal. Right? That would be your minimum target when you trade against an ending diagonal C or 5. This is very shallow, right, for a correction after a diagonal. Happens. It's also a running triangle, A, B, C, or you can count it as a running triangle, A, B, C, D, E. Now, the common target, interestingly, for a running triangle is actually the 0.1 to the 0.4 Fibonacci. Where is it? There. Which is a fib I don't often use as per the colors. These are my old colors. Right, 0.1, 0.4. But it is the target area. Triangle is not allowed in a wave 2, though. Only in a wave B or a wave X or corrective structures, or a wave 4. Yeah, yeah, there's also WXY potential in this range here. I don't really want to jump into triangle conclusions, but yeah, we'll see. So in the morning update that I posted before going live, I said, well, we're looking for price to move up, right? Either in a C or 3. This wave 2, it might not go down that far. So yeah, this might be peak example here. What if there's an irregular correction to the initial correction down? An irregular correction. What do you mean, Jonathan? This can take us to... The corrective structures I showed earlier on a higher time frame can take you down to 70, yeah, for sure. But now, of course, locally you move to the upside. So that's why like probabilities can be different per time frame. And locally, probabilities were higher to move up anyway. And also, of course, once we were at the like 74, 78K area, we moved sideways for so long, the probabilities are higher to move up. Right? When did I make this video? Let me refresh this here. 6 days ago. Where was price 6 days ago? We are now 22, 6 days. So price was in the middle of the range here. Even before that video, looking for a move up in both corrective structures and impulsive structures. So if you look for a bigger correction, you look for for price to move up, to form a wave X, form a wave B. If you're looking at the end of something and a move up to potentially all-time highs later, you also want to see a move to the upside. So generally, those were the probabilities. And even though on a higher time frame, the bigger corrective structures can definitely get you to 70. Yeah, no problem. It's now up to the move here. So that's why I like to keep an eye on what's happening here. And if you get a 5-wave move up, followed by a 3-wave correction, that is where the bulls really start to get probabilities, right? But we're not there yet. This can still be an ABC, right? We just need to play it as it comes. Still in wave 3. Still likely to touch support at 86. No, I don't really see 86 coming. So price here touched the 886 before taking the high, increasing probabilities to take the high. So locally here in silver, I posted, well, there is the potential for 1, 2, 3, 4, 1, 2, 3, 4, 5, right? But then again, you would basically need to create a high and then move to the downside. Now the volume is higher in the recent candle, lowering probabilities that this is a wave 5, compared to this being a 3. Probabilities increase, this is 3. And that's just because of the volume, as higher volume is more common in 3s than 5s. So that is why looking for 86 at the moment gets lower probabilities. It's because of the volume locally. Yeah. If price would come down there, I'm happy to observe what the reaction is. If price moves up to the point of control or 92, 93, I'm happy to check out the resistance and see what price does and trade accordingly. No, I just want to highlight the fact that again, please don't let emotion get the better of you. No. Cheers, Jackson. But actually, Gun is thanks to Samith. So he is studying Gun. Ike in Discord. They're mainly active in gold, but they know a lot about Gun, which is very impressive. I would love to study Gun. The issue is time for me. Last couple of days, I can feel a bit overwhelmed at times with everything that's happening. And it becomes sometimes quite difficult to manage my time. And I really struggle to find time to develop myself. Now, I already have a plan and I do Elliott Waves and all that stuff. Like I trade, all good. But I love learning new stuff. I love learning more about, or I love to read business books, self-development books as well. just to be, get a little bit better every day. And I like difficult theories. I love Elliott waves. When I see how Samith and Ike in Discord talk about Gun and Rejo is stepping in as well. I mean, I really get like that feeling of, I want to learn this stuff as well. It sounds very interesting. It's not that I need it, right? But it would be interesting knowledge to combine with my Elliott waves as well. But I really struggle to find time, and Elliott waves is the focus in my trading as well, so it gets priority. Oops. Some people call an expanded flat an irregular flat. Oh, I see. Okay. And what was the question again with the expanded flat then? If this is a potential wave C maybe of a expanded flat? So there's two potential expanded A, B, C, but then C is super long, or you would count an A, B, C here. And then this move up is wave C, and then you move it back down. Impulsively. So that's the difference, right? This has to be an impulsive structure, not a three-wave structure. So this is where the probabilities are made for the bulls and the bears later. Have you seen Solana recently? Not really, to be honest. I haven't really taken a look at it. How I know if I am one of the lucky 50? I suppose if you were quick, then very likely you are. I did not expect the list to go that quick, but eventually we will see we will send people an email. So the people that are able to test the platform, we will notify them by email later this week. It hasn't been done yet. What are your trade categories on your chart? That's like when you have like an A or a B or a C level type of trade. So generally, if you have a trading plan, you can eventually create categories. So your A plus or your A trade would be a trade that checks all of your entry requirements, right? So you want to see this and that and that and that, and then even that. And even though that last point might not happen very often, if it happens, that's an A, right? That's an A trade. But then a B trade might be so 5 are met, but then, holy moly, Koen. Your A trade is where all 5 of your entry requirements are valid, are checked, even the one that doesn't happen often. Now a B trade might be that 4 out of the 5 entry requirements are checked, right? So therefore, the trade setup maybe has a lower win rate or maybe a bit of a worse RR, but down the line, it's still profitable. So you can still take them, but maybe you take it with a lower position size. So an A trade might be risking 2%, while a B trade might be risking 1%, right? And then a C trade, right, it can be a setup where, again, one of your rules or maybe 2 rules are not met, but it's still profitable. So maybe you trade with 0.5%. Yeah, you know what I mean? So that is how your categories are dependent on your trading plan. Now with Elliott waves, I gotta say, if I trade Elliott waves, I don't really have categories because I trade the waves, man. Like the chart will show me if there's a 3-wave corrective structure in a down, like so. I mean, I have tons of examples. So of course I took the long here because we had grind, quick move down, and we started moving sideways just on top of support. I mean, that's a long for me every day, right? So I mean, but I don't classify it as an A or a B. It's just a different setup. Yeah. And then down here, wait, let me go to the 15. So here, we had a 3-wave move down. I posted this in silver when price here was moving up at like 10 p.m., right? This is where price was confirmed as a 3-wave structure down. That's my long. It was the first time after this range really that I went long. So if this was bearish, you want to see a 1, 2, 3, 4, 5 wave structure, which we didn't. because it was down, sideways down, got back up. What price did is touch the 886, very important fib level. Now, the fact that price touched the 886 significantly reduces probabilities for this being a 1, 2, 1, 2, 3 down. Besides, your second one is much longer than your first one, and etc. So when the 886 is touched, I'm like, cool, three-wave structure. My bias flips. If this is a three-wave structure, I'm looking for price to take out this high. If price takes out the high, I get into management. Because then depending on the reaction and potential continuation and volume and I will manage accordingly, right? So that is where, so those are, I suppose from an Elliott Wave point of view, those are the two that I trade the most. I don't really trade, oh, this is going to be a wave 3 or this is going to be a this wave or that wave. I just look at, is it corrective, right? Then I trade once a three-wave correction is confirmed. If it is impulsive, 1, 2, 3, 4, 5, I generally tend to trade once price starts grinding again. So you have a couple of 1, 2s, you get your 3, then you get a couple of 4, 5s. And this is where I start counter trading and looking for the other direction, looking for a retracement. To at least minimum target is the 0.382 Fibonacci. In that case, at 88.9K. So yeah. The major rejection point. Well, now that price is moving up and volume is increasing, we just need price to eventually slow down. We have rejection. I mean, I don't really expect too much here, but 92, 93, 96, 97. And then above that is, well, I think we still have one more level in the middle. Yeah, so 98.2, little bit there. And then it's back above 100, really. So, for example, a trade that I am willing to take, right, would be, if this turns in an impulse, right? 1, 2, 1, 2, right? And then you have another little, like 1, 2's there, but 1, 2, 1, 2, you get your 3. Eventually, you're going to get 4, 5's, right? And the moment this happens, while being close to one of my resistance boxes, that's a short for me every day. So, yeah. Well, of course, at the moment, I'm not very interested. There's an echo. Yeah, I heard it once before. Not many people actually hear it clearly. But I'm still in pretty blank room. We moved to the south of France and I set up my desk and everything. And then you know what happens after? Once you got your workstation set up, nothing really happens. I do have a closet that I bought. I have to build the closet actually. It's going to be behind me so that I can put some nice stuff on the closet as a background and some lights. But yeah, I still need to put it together. Do you have any stats about the probability to take liquidity of the second versus fourth structure? Ooh, that's a question. To take the liquidity of the second versus a fourth. What is the second and fourth? I guess that may be a date. Is that here? 6. This is the second, so that like 95. Sound reference is great software for room correction. Oh, sounds okay. Okay. Thanks for the advice. Sound reference. I get to Sonar. Oh, wait. Sound reference. Your specialist retailer for audio. Turn your living room into a stage. Okay. Yeah, thanks, DK. Thanks, man. Also, like when we... Oh, I forgot to put the light on. So when we moved to the south of France from the Netherlands, moving to another country, it's easiest to move into a furnished place so that we don't have to like mess around, or at least like hire trucks and trucks of stuff to carry all the way to the south of France, because it's a long trip. So we were like, you know what we're going to do? We're going to just sell everything, one car, everything in the car, and then go to the south of France. So this is not like, this is a rental place, furnished, completely furnished rental apartment, which is amazing. And we are now slowly starting to look for other places because we're kind of settled now. We do need a social security number and some other stuff, but now it's the time where we can slowly start looking into different areas in the south of France. Where do we like to live long term, buy property, all that stuff. Do you just answer questions to your members, to anyone in live streams, to anyone? But in the membership group, like in Discord or you know, like I mean, in the Gold Discord, that's where people can write. That's where I answer questions as well. Yeah. Thank you, Kali family man. Cheers, man. Do you just own? Yeah. So can you explain the daily? Oh, the daily naked point of control. Right. So those are these levels. So the blue ones, not the red. Right. The blue levels on my chart, D and POC. That's a daily naked point of control. Now, what that means is that, well, let's say on the 11th of April, the highest amount of volume on that day was traded at 82,675. As per ATAS, which is where I get these levels from, but you can also get this with other tools, which I'll share in a second. My templates are in Discord. Where is it? Discord. Go here. Good to know. There we go. In Discord, if you go to the Good to Know group, it's all in the description, of course. Then the ATAS templates are here. Just make sure you select the correct chart and stuff to get the same results, right? Also, the steps to upload and everything is there as well. And that is where I get my daily naked point of controls from. And these are great support and resistance levels. Of course, the ones that are touched are off my chart, right? So the only ones you see are the ones that are not touched, because once they are touched, they're not naked anymore, as we then like to say, right? So basically what it means is this was the highest traded volume area of that day, but price never, the next day or the week after or whenever, it hasn't yet come back. Not that it has to, right? But it did not touch that volume area afterwards, after that day. And that's when you leave it on the chart, right? So you can see I have daily naked point of controls that go all the way, like here, 5, or what is it? This was February, right? I have even more over here, all-time high, 20th, right? And if I do this, you can see how many I have. No? So that is what a daily naked point of control is. You can find it with the templates there. ATAS is free for people in crypto. Now, alternatively, what you can do is, I do not recommend this first one, but if you want to put in the work, then, you know, happy days. But basically what you can do is figure out when your day starts. So I recently got a question. I'm living in Sri Lanka. Your day is different than my day. How do I know how to pull a daily volume profile? Well, if you go to the 4-hour chart or everything else but a 1 hour, so a 2 hour, 4 hour, right? And you check the time in the bottom, then you can see that this candle opened at 6 p.m. The candle previously, 2 p.m., Central European time, that's my time zone. Then you have 10 a.m., 6 a.m., 2 a.m. My daily candle on Tradingview opens at 2 a.m. So not midnight, right? My day, Central European time zone, my day starts at midnight, of course. But on Tradingview, the daily candle starts at 2 a.m. And you just got to figure out what time it is for you. So now I know, okay, so 2 a.m., that is my start of the day. So then I take a volume profile from the start, which is 2 a.m., to the next day, 2 a.m., and I mean, let's do that on a 15-minute time frame. A little bit lower. So we have 2 a.m. here, and then we go to 2 a.m. here. So this is Sunday's volume profile. And this is your daily naked point of control of that Sunday at 85.1K using the volume profile tool, right? Now you can also use some indicators, which is what I would recommend, to be honest, instead of using the volume profile, which takes a lot of work. The first one is called PVP, this one here. You can select if you want a daily, weekly, or monthly point of controls, right? These are naked ones. The ones that extend all the way to the right here, right? Those are naked ones. You can set it on day. You can set it on week as well. So, and then I click on OC. There we go. So this is a following PVP. This is your weekly naked point of control. Following ATAS, it's a little bit higher. ATAS has my preference. But this is your PVP, weekly naked point of control. Right? This is the current week point of control according to PVP. But then you can also set it to day. I don't use anything lower than day. And then you have market sessions and volume profile by Leviathan. Great indicator. This one also shows you, so currently it's set on daily. You can put it on weekly, monthly, etc. Right? But I don't go to the sessions. So I only really use daily or weekly, to be honest. Or if the month is finished, monthly, but not really quarterly and yearly. And then the red lines, those are your daily point of controls, but this one doesn't extend for it to show it's naked. So here you can see the red line, right? This is your day, right? This is 1 day. And the red line doesn't extend, but this one has not been touched, right? Price didn't come back to touch it. So this one is naked, but you got to see it yourself. It doesn't extend. Also, the indicator for you when you open it first time will be different. I just changed my look and feel, so I only have the red lines, but you will probably have some other stuff on your chart. This red point of control is one of those point of controls as well. So, yeah. I like to keep an eye. Sometimes there's a bit of a difference between ATAS and the other levels. So that is how I get them. Weekly naked point of control is the same as a daily naked point of control, but then it's a whole week. So during the week, people trade the highest volume level of that week, right, is going to be a weekly naked point of control. If price after that week comes back to that level, then it's not going to be naked anymore and it will be removed from my chart. If you would like to commission some art, let me know. Yo, in New York, I mean, I'm very interested in art. I really like art. And in New York, we were in, 1 second, right. I have an art guy. He's a sales guy. I always forget his name. Ah, yeah, there we go. From Eden Art Gallery, and he is my contact for art stuff. So if you don't know about Eden Gallery, it's I mean the art they have is incredible. And in New York there are 3 Eden Gallery locations, and we visited 2 of them. And had a little peek to see what they have. And yeah, I like art. Yeah, I like art. Can I make a website for you or edit videos? Well, I mean, by all means, Cherry, just send me a DM. And yeah, maybe at some point. I do have an editor at the moment, Lachlan, that does the shorts. Website is pretty much almost getting to like a finished state. It's done by a company at the moment. But there might always be something. And if not, people that ask like, hey, can I do something? Or I have a Word document where I keep track of all the names. So I write the names down, and I write behind the name what people can do, right? What's their skill. And then if I like need something, then I just hit you up. I write like ta-ta-ta. And of course, people get paid for it, right? It's not like, can I do something? And then you spend time and I get stuff for free. That's not how it works, right? So of course, I pay everyone for whatever they then do. But just send me a DM on Discord or anywhere else. And maybe there might be something coming up. Bro, it didn't retrace to the support zone. It didn't. It didn't. But that's also not, it didn't need to. No. Probabilities were higher to move up with or without your retracement. In the morning update, the 3-minute short video, I said it doesn't, right? Wave 2 doesn't need to go back down, right? You can also just continue, which is what you see here. So, of course, I am not like the I don't know the English terminology, but the person that has a glass ball and is able to see exactly what price is going to do, right? I have a good indication because of Elliott waves, right? So we pretty much are on the right side most of the time. But hey, if this support is going to be touched or not, well, I don't know. Probabilities were just higher to move up. You either retrace and you move up, or we move up. Now the moment, so in case of your trading, of course, the moment price here touch the 886, you already know probabilities are higher to take out the high. And then the moment you take out the high, of course, one has to observe what happens next. Now we are at a little bit of resistance here. You can see the nice respect. Right? Price just moves up, 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 and now we have a bit of a break. Oh. Side note, I am not interested to go short. I'm not a financial advisor. Everyone has their own plan. But from an Elliott wave point of view, no bueno. Right? It's not great. You have volume increasing as price is moving up. That's impulsive. Right? Higher probabilities. You are looking here at a wave 3. And that you still need wave 4s and 5s. Now, if price would turn around, right, if you do, right, then the probabilities are higher that this top is going to be either a wave C or a wave A. In this case, it would be a wave C compared to it being a wave 5, because it is not common for wave 5 to have the highest volume, right? So you can see that price is moving up, but we create higher volume. So, preferably, therefore, it's a wave 3, which basically means that you still want to have 4s and 5s later once you eventually start ranging sideways. See you at all-time high, guys. Yeah, wouldn't mind. Wouldn't mind. I'm in a long, but got to take it step by step. I personally, I don't really see it going in a straight line to all-time high. I would like to see a retracement first. So, or you get multiple 1-2s, or you get a move up and a retracement. Right, so here you didn't get a straight loop. It's too easy. You know what I mean? It's like, it feels too easy. I mean, my long is not gonna mind, right? Like, yeah, cool. But also, if this has to go all the way to all-time high, you need a very big extension still. This is your 1-2, low time frame 1-2. You need a 3, 4, 5, 4, 5. Your 3 needs to be really big to take out all-time highs with a 5. There are not enough 2s here locally, right? So here you can see you have 1-2, 1-2, 1-2, right? Or you count another one, right? 1-2, 1-2, 1-2, 1-2, 1-2. There's a couple of 1-2s. The more 1-2s you have, the more explosive your 3, right? So the higher price goes. Locally here, there's not really enough 1-2s, I think, to reach an all-time high. I think it makes more sense to move up, retrace, and the retracement decides the probabilities of taking the low or moving back up for all-time high. So also here, right? So a couple of 1-2s, that's something that you tend to see instead of very clear impulse, 3-wave correction, continuation. You get like 1 and 2 and 1 and 2, and you take the high again, and you take the high again, and you take the high again. But it feels like you're still in this range, right? Alternatively, let's see, you get, what's another good example? This is also 1-2, 1-2, 1-2, 1-2, big wave 3. This is like this is of course all the way at the low, not really all-time high, but you get a move up, you get a retracement, and then you push. Maybe at the previous all-time high. What did we have here? Move down, up, sideways, up. Move down, up, sideways, up. Yeah. I don't really expect it to just go straight. Maybe it will. I mean, I'm in a long anyway, so I don't really care. But now this move might look very surprising, but this range is a couple of 1-2s. If you go to the lower time frame, then even though it may look like a triangle, if you count this in detail, you can go back to the content of February or start of February 2024. You can count this as a multi 1-2. So you have your 1-2, 1-2, 1-2 explosion, and then you get the next leg up. So we'll see how far it gets if we continue past this point of control. We're still hanging. This move off the low here doesn't really count nicely as a wave 1. This looks more like a whole corrective thing, and then this is your second, right? If you do have nested 1-2, 1-2, then yeah, you have a couple of 1-2s locally, but they're not really big enough time-wise. So I would prefer to reject before all-time high, get a bigger retracement in, make people scared, maybe even take out the low again, like we did in the 70K range. It's then if you touch the 886. Taken from, let me just put it on the chart. That's correct. That's correct. If you take the 886 from the all-time high to the low, 105. If you hit the 886, probabilities are higher to take out the high, yes. But that doesn't mean it just happens in one go, right? What you often see is once price creates a move, move down, move up. If you touch the 886, probabilities are higher to move at least back to the golden pocket and then look for continuation. If the golden pocket doesn't hold, you might want to look for a potential deeper retracement. It's not too common after an 886 to just fly, right? To just go straight up. Here's a great example of a couple of 886 touches. This is your previous range. That was the first retracement, first move down, first move back up. Then we made the low at 56. Guess what? Price came back down. Very interesting, right? I'm actually not sure if we touched it here. Oops. Did we touch it again here? Yeah, we did. So the probabilities for this being bearish, as in a multi 1-2, it's very low. You got 3 886 touches here. I mean, you could get a diagonal here. 1, 2 touches the 886. It's not great, right? Then you need another 1-2 for bears, 886. Probabilities are higher. Everything here is corrective. I actually did a whole 2-hour video, or actually longer, on this range and how I would approach it if I don't have any analysis on the chart. And that video is also in this playlist, things you should know about as a trader, and it is the full plan video. It's a live stream. But in the live stream, I really take my time to guide you step by step through the whole process. So if you are learning Elliott waves, then I really recommend this video. And it is the range between 73 and eventually 49K. And I analyzed the range when price was here. And then the probabilities were higher, that is the low, that's the conclusion. But how do you get there, right? How do you get there? That's explained in the video because I go through it step by step. 90K psychological reaction. I don't really do a lot with like 90K, 100K, 80K, like the round numbers. I personally use the levels like you see on the chart. So we have the point of control at 90.3 and we have a little bit of a break now at that point of control. So, I mean, that's also what I like to see because I put it on the chart. It gets respected, a bit of resistance. So, yeah. And now we'll see what happens here when moving into the point of control. I think that also means that for the most bearish option, you now are in the target area, by the way, which is, so this is your, we have the bullish scenarios, but you always need a bearish one. And it's good to be aware of it, right? That's all I can do. So your most bearish option is what you see on my chart, which is a zigzag A triangle BC. And the minimum target for C is this box, the 618, which is where we are now. And after a triangle B, if you can count a triangle here, it's a little bit like, is this an impulse or is this a zigzag? I prefer this as an impulse, to be honest, which lowers probabilities for a triangle. But nonetheless, your minimum target for C is always the 618, which is where you are now. You then need to count wave C as 1, 2, 3, 4, and this is your wave 5. However, your wave 5 now has the highest volume, which is more common for a wave 3. So then preferably we might look at the pop, pop, and then do that. And then you get your 1, 2, 1, 2, 3, 4, 5, 4, 5, and then you end your structure. Wave Cs, they can end on a high amount of volume, but you still preferably see some 4 or 5s. But yeah, at the moment, right, like there's no sign of weakness. Yeah, we're at a little bit of resistance. But I mean, if I go short, then I need to see weak. I need to see hours of price action. This is not enough for me. Not according to my plan. Everyone's plan is different, of course. But 1 hourly candle closed against the level, moved above resistance. Next level respected. If you pass the point of control, then I'll see us going to 92. Are you a day trader or more like a swing trader? Interesting question, because I answered that question in the interview that I had on the Crypto Princess YouTube channel, which is going to be live on Thursday. So make sure to check it out. I'll post the links on YouTube and Discord and stuff. But to answer your question here, I am I suppose, in-between day and swing trader, which is what thank you, Mark, which is what I say in the video as well. Like, I'm a day trader, as in like I generally enter on a 1 hour time frame, or sometimes even a 15-minute time frame, 4 hour time frame, more swingy. And I tend to hold for a bit longer than a day. It's not really I go in and out in one day too often. It happens. Usually when you enter a position and eventually stop loss break even price comes back, it might be a relatively short trade, or if the plan is correct, but eventually it is a loss, because that happens, right? According to your plan, you're not winning every trade. Losers tend to be quicker than winners. But I'm like in between the two, I suppose. If I had to pick one, I would classify myself more as a day trader than a swing trader, because if I think about swing trading, I really think about having positions for weeks, which is not really what I tend to do. So, yeah. Anoop, before Orange Man trashes the market again, I think market, maybe, I'll take my short right now. Just make sure you trade safe. I mean, yeah. If a short for you is according to your plan, then follow your plan. But I'm not a financial advisor. I'm personally not in a short. But that's me. I'm in a long. Is there an option where someone can copy trades? No. I'm personally, that's a good question, actually, because it's also covered at the end of the interview with Crypto Princess. Quite some questions here that I answer there, but no, I really focus on helping people to create plans themselves. I have, from the very beginning of the YouTube channel, made the choice to not accept P&L screenshots in Discord, to not have signals, to not have copy trading and all of that stuff, not show trades during live streams. I in my opinion, everything I do with my money is very private. No one has to know how much I have, what I own, how much I trade with, how many digits behind in front of the comma in profit. I also think, in my opinion, I don't need to show those numbers to try and get the clicks and the subscribers. it attracts a different audience. I don't want that audience necessarily that looks for signals and those type of things. It's just probably not my audience, as I am not that kind of person. So I'm very much focused on education, helping people to build their plans, which will now also happen with the Hexaplan platform that we're developing. Helping people to learn more about Elliott waves as well, right? So that they can use Elliott waves in their plan. So I have an Elliott waves beginner's guide on YouTube. I have this video here, which is probably this. You will never ever find another video where you'll see a more simpler explanation of how to use and trade Elliott waves than this one. Because I don't even use any Elliott wave counts here. I can't make it more simple. This is as simple as it comes. And I have lots of stuff in Discord. I share templates. I share one-pagers and all that stuff. So, yeah. And if someone is not willing to put in the work to become a consistently profitable trader, then if you're listening now, one of the 250 people here, then it's better for you to save your money, take it off the exchange, right? Put it into something else, or just be an investor, but not a trader. So I only really focus on education, and everything signals and all that stuff. That's for other people. Yeah, I don't do that. I don't personally support people doing that. I focus on helping people to create a lifestyle, right? If you can trade yourself and you have a good plan that you have developed yourself, then you can trade anywhere. You can be on the beach in Miami and you can put on a trade, not being dependent on other people, influencers, the performance of someone else, because, yeah. So, oh yeah, the book. Yeah, the book is coming as well. The crypto, or the Elliott Wave Compendium, crypto compendium. The Elliott Wave Compendium is coming as well. So we are working on a book, which will be on Amazon Kindle, and then the paperback version will be launched soon after, or maybe at the same time. But we are working on an Elliott Wave Compendium as well. So yeah. So it's a good question, right? It's a great question, as it gives me the explanation of why I personally don't do it. And some people, it's very rare, but occasionally you have the people that then doubt you, but that's fine. That's fine. You know, there's enough channels on the internet and on YouTube where they can get their dopamine hit of people that show their 6 digits, 7 digits trades. I am happy to not show my 6 digits or 7 digits trades. I'm happy to keep that private and enjoy the money myself. And if I can grow a YouTube channel faster, showing my trades, my setups, my digits in profit, and put it on the thumbnail, then I am not one of the people that likes to do that. It's not my vibe. So yeah. It might sound very harsh, but I just have a very strong opinion on it. Either you learn and make a plan, or you stop trading and do something else and just invest. If you don't have the mindset and determination to, for months or years, grind to build a plan, basically studying the industry like you did at school, then you don't belong in the industry. You're going to lose money. It's going to happen next month, in 6 months, in a year. And if you don't change the mindset of, okay, I need to work on myself instead of depending on others, right? You got to trust yourself, and not put your trust in other people and other things. And, you know, so, yeah, exactly. It's a different audience, which doesn't fit me as a person. But that's no problem, because everyone has their own audience. I'm not competing with anyone. I'm literally just hobbying through my YouTube journey. I mean, I just really enjoy it. It started as a just helping people in another Discord group that I was part of. They asked, "Hey, you want to make some videos about what you're actually doing?" Sure. And then and here we are now, like 2 years and a bit later. So yeah. Can you share what percentage of capital do you risk? 1% per trade. Yeah. What are you doing when you hit the target on linear chart but not on log? Depends on the time frame, right? So currently I'm on a linear chart, and the linear chart levels here, I mean, even if I go to log, right, my levels are the same on log compared to linear. Like the boxes, they remain, look, right? They still have the same 92451, either log on or log off. It doesn't matter. So in my case, the levels remain the same. However, if you are a trader and your levels do move on linear and log, you have to know when to be on linear and when to be on log. In other words, when you are on a time frame where price has moved, whatever chart you are analyzing, but if you are analyzing a time frame and a certain period of time where price of whatever asset has pumped at least 150%, switch to log. If you are analyzing a time frame where price has dumped at least 30%, consider going into log as well. If price did not do either one of those, so price has pumped maybe 20% or 30%, right? Or 10% or 5%, just stay on linear. So especially with the moves here locally, right? So how much is this move now? So this is a 20% move. Just stay on linear. No problem. No problem. But the moment you're going to move into like really big moves, right? So if you would analyze the move from 15K to where we are now, that's a 600% move. So you will analyze this. Oh, that's nice. 6 on all the zeros. So in this case, you analyze the chart using log, which means that the levels of interest will be in log. Yeah. Yes, Divinewood. Also, with regards to position size, the new platform Hexaplan will also have a whole calculator and everything. So you can easily calculate position size and just everything that you need. Elliott Trades. There are already 50 people that applied, but just put yourself in the list, because maybe at the second testing round we're gonna have more people testing, right? We might do it in batches or whatever. So you can always just fill in the form. I don't know if Jeroen is still here or, but yeah, currently there's already 119 people, which is incredible. But we'll see, of course, how we progress. On which time frame do you look for multi-1-2? That's an interesting question because it's related to Elliott Wave degrees. It's actually multi-time frame. So a multi-1-2 is officially not an Elliott Wave pattern, but it is something that on the channel we do highlight as a structure. I have to, 1 second, go to my channel, go down to this list. This video. Multi-1-2. Now, it's not an official Elliott Wave structure, but it is important because a multi-1-2 happens on different time frames. I mean, you can see it on one time frame, but just for the sake of explanation, right? Okay. So this is the weekly, right? And on the weekly, we can see a big impulse to the upside, no? Now, this impulse to the upside on the weekly starts with a 1-2, okay? So that is your weekly 1-2, no? Wait, let me actually use the real real stuff here. That doesn't matter. Okay. So that's your weekly 1-2. Then you go to a daily. Right? Now in your wave 1, you have another 1-2. No? In your daily wave 1, you have another 1-2. And then inside this 3, you have even more 1-2s. I mean, if I would go to the lower time frame, what you see here, these are 1-2s that are nested. 1-2, 1-2, 1-2, 1-2, boom, 3. 4-5, 4-5, blah, 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 4-5s, ensure 3-4-5. So a multi 1-2 can be found on different Elliott Wave time frames. Of course, you can also see them on one time frame. Here it is. So this is your 1-2, 1-2, 1-2, maybe another 1-2, right? There's a couple of 1-2s here. And then you get your big 3. And the reason why I wanted to cover a multi 1-2 as a separate video is because of this. They are incredibly profitable because you expect a very big move afterwards, which is why they are so interesting. What you need to identify, though, is you have your big wave 1 and your wave 2. This is your highest degree. Let me put the degrees on. 1, 2, 1, 2, 1, 2, maybe another one. And then you, boom, you go up. Your first 1-2 is the highest degree. Right? Let's make it bright red. Your second 1-2 is a lower degree. Wait, I'm gonna make a full like educational little part out of this now. Okay, cool. 1, 2. I'm running out of room on my mouse mat. Okay. Well, I'm actually gonna redo it. I want to be theoretically fully good. 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. Poof. Okay, there you go. So let's put the count on the chart. Highest degree is that one. Let's make it yellow. Lower degree. I'll explain this in a second. Don't worry. This, I'm gonna make it a bit different. I like the color blue in case you didn't notice. So a lot of my stuff is blue. Okay. So this is your multi 1-2. Now the classic impulse structure is a wave 1, 2, 3, 4, 5. If you read the books, this is what you see. What they don't say necessarily, like specifically, is that inside your wave 3, which is this move, and inside your wave 1, and inside your wave 5, you have another impulse. So inside 3, you have another 1, 2, 3, 4, 5. But inside wave 3 of wave 3, there is another impulse. 1, 2, 3, 4, 5. And you can go down and down and down all the way to the 1 minute time frame and see that, right? So in this case, here is your first 1-2. Your bigger impulse that would be portrayed in most of the platforms or most of the books is 1, 2, 3, 4, 5. That is probably what you see in most of the stuff out there. However, inside your yellow wave 3, right? Most commonly your wave 3 is the extended wave. That's the biggest, the longest, the most volatile, has the highest amount of volume. generally in your wave 3, you will be able to count subwaves. Now then you have your orange 1, 2, 3, 4, 5. Your orange count is the first subdegree, right? So you have your yellow count, that's your highest degree. Orange is a subdegree of yellow. You first need to finish the orange impulse in order to finish yellow 3, to get yellow 4 and 5. But inside orange 3, you could count another 1, 2, 3, 4, 5 in green. You need to finish the green impulse in order to finish orange 3, get 4 and 5. Finish orange 5 means finishing yellow 3, get another 4, 5. Now, generally, you can, so let me do this first. If I go to the settings, then you can see degree in the settings of the Elliott Wave Impulse and all the other Elliott Wave structures. These are all the different degrees. Basically, what I'm explaining now has to do with this. Just you don't need to learn this out of your head. What time frame is cycle, which one is minor, minuet, right? Micro, doesn't matter. Just use whatever you think looks nice and just color it, and then you'll be good. But this is where the degrees come in, right? So it's part of Elliott waves. But you can also approach it from a time frame perspective. Generally, your first highest degree 1, 2, right? That can be, for example, your 4-hour, right? Let's put it like this. This can be your 4-hour time frame 1, 2. So on the 4-hour time frame, you can count a 1, 2, 3, 4, 5 and a 3-wave correction. This wave 1 here, that can be your 1-hour time frame impulse. So on the 4-hour, you can't really count this as a solid impulse anymore. You need to go down to a 1-hour time frame and you'll be able to see the subwave. This one, that could be your 15-minute time frame. On a 4-hour time frame, this might look like a straight line up. On the 1-hour time frame, you can't really see enough detail. On the 15, you can count another 5-wave impulse and a 3-wave correction, right? Yeah. So, for example, I'm now on a daily time frame. On the daily, I can see a 3 here, right? I can see a 3 here, but this looks like a straight line down. This also looks a bit awkward. I would need to go to lower time frames. I can see there is a bit of a range here, which has to be another 2, but I don't know what's going on there, right? I need to go to a lower time frame in order to see what the 2 is. So yeah, and every 1, 2 respectively needs a wave 4 and a wave 5. And this is where the most simplistic way you can use and count Elliott waves comes from. This video, I mean, if you have the time, just please check it out. It's 26 minutes, but the core theory content is only like 5 minutes. And then the rest is examples to drill it in your head. The absolute simplest way to use Elliott waves is related to what you see on my chart. It's the grinding structure to begin with, right? Quick move up, and then you end with all the overlap. The moment you see this, you start considering looking for a move back into the other direction. Example. Ta-da! That's how easy it can be. Right? I don't even need to put anything on the chart. I just look at the structure. But you are using now Elliott wave knowledge in order to identify this. Of course, people will probably call this might be a bear flag or a bull flag, or I don't know how people call it in the traditional terms. But now you know, okay, we have a bit of a grind. Those are your 1, 2s, that's your 3, those are your 4, 5s. But I don't need to go in detail to explain that if you get a big push followed by a grind, that you're looking for price to move in the other direction. I can do the same locally. That's also what I did in the video, right? You have a lot of overlap here, very slow. Get a quick move down, right? That's your quick move. And then you start ranging again. Slow, slow, slow. I mean, you know. In the video, that's what I spoke about as well here. The simplest way. I spoke about this local range shortly as well. So you can also use it in corrective terms. And then I also cover a range, because this is just one of the two ways to make Elliott waves incredibly simple. The other one is ranging structures, which took me a little bit longer to explain. But yeah, this is basically as easy as I can make it, I suppose. Yeah, it does tend to look like a leading diagonal. If you would go again back into the theory, then a multi 1-2 is more common than a diagonal. It's just probabilities, but it's good to know about. So people here were counting diagonals. I favored a multi 1-2 because of the knowing the theory, right? Know the probabilities. Also, this final move was going to be your wave 5. It started to be too long. The moment, if that's your 5, you want to see a bigger retracement. You took out the high. That's not what you really want to see. So, but multi 1-2 is more common than a leading diagonal. 1-2s don't necessarily need to form in the shape of a diagonal, but just like you see here, it is not. The wave 1s and the wave 2s tend to overlap. Right, so they overlap with each other. That's what you like to see. So yeah. Oh, moving above the resistance. Up. Okay, Jeroen posted the form. Thanks, Jeroen. Will this be in the book? The multi 1-2 stuff is in the book with even more information and detail than here in the stream. Yeah, I included it in the book as well. I also know that people online find it very difficult to find good information on multi 1-2s. They can find the impulse, but they can't find the multi 1-2. So, when would you close a position? Can you show an example? Generally, so there's two ways. I like to always TP at resistance boxes, right? So that, I mean, I have identified those areas of resistance or support. So those are always areas that I am happy to take profit. If I have over a 1-2-3R trade, then I always consider just closing as well. However, with regards to an impulse, so in longs, when looking for an impulse, 1, 2, 1, 2, 3, 4, 5, 4, 5. The moment we start moving into 4, 5s, I don't necessarily feel like you're already at the biggest portion of the move. I'm happy to go out somewhere in the 4s and the 5s because, again, you start with a bit of a grind, get a quick move up, end with a bit of a grind. I'm starting to look into the opposite direction, right? So that's a way that I then enter as well, which is unrelated to the boxes. It's just more the structure that once you start moving into 4, 5s, and it also saves me from ABCs. Because, so imagine right now, you're looking for a 1, 2, wait, let me do this more like 1, 2, 1, 2. You look for 3, 4, 5, 4, 5. Imagine that you are waiting for this structure, right? So let me just use why am I not using the count that I have? This one. Now, the main difference between your bullish and bearish scenario, this is your bullish one, 1, 2, 1, 2, 3, 4, 5, 4, 5. The main difference is you add yourself another 4, 5. In a quote unquote bearish scenario, let's take the other one, you end here and you don't get another 4 and 5, which you get in the bullish scenario. I don't want to be part of that additional 4, 5 anymore. Because what if it's a wave C and it does this? Oh, it's going to be sad times, no? If it's another 4, then I know that I will be able to enter on the 4. Because I know that I preferably exit here. And then I know that if we get a corrective structure in 4, I can re-enter because I know Elliott waves. I can read the structure, and then based on the structure and some support resistance and you know some CVD, I'll be able to just get another entry and then look for a 5. But it has to be a quick TP because we're looking for 5s. We're looking for a move to end. I get a lot more interested to look into the other direction. So that's another way that I like to exit on my trade. So that is, I think, 3 things now. So 2 are Elliott Wave related. 1 is just the boxes. Yeah. Anything else? Any other exits? I mean, besides, of course, just a loss is an exit and stop loss break even is an exit, but actual exits of trades that win are, yeah, mostly that. And that's in an impulse. I mean, in corrective structures, you look for 3-wave moves, right? But then I like to join in a B or an X, and then I look for a C or a Y. And the C can sometimes be very quick and very sharp, and then out of nowhere it stops and reverses. But then again, I don't really like to wait for all the 4s and the 5s. So the 618 can be an invalidation. If you look for an impulse and you take a 0.618 from the low of 2 to the high of 3, which is an invalidation for a wave 4, right? Then that can be stop loss in profit. If you enter in the 2, you look for the 3 and then a 4 or 5, your stop loss in profit is going to be there. But what I don't like to do is get a big portion of the move and then get stopped at the 618, because I lose more than 50% of my paper profits. Instead, the moment price is gonna start like curving, right? The moment it starts doing this, which eventually it always does, right? I mean, example, right? You start moving sideways like this. Now, first of all, this one is easier, many 1-2s. So this little range, you still look for price to move up. But once you start ranging sideways longer, I'm very happy to just get out of longs that I took here. Just exit. I don't need to look for that small little bit, because think about it from a risk management point of view. Imagine you entered wherever, somewhere here in the middle. You have your trade to the upside. Very nice. You don't care about this little range because you know it's a wave 4. All right, so you're going to exit somewhere here. Price starts to range more sideways. Now, from a risk management, or I suppose profits point of view, your trade at that moment in time, if you put your stop break even, that's your stop loss. You are now looking for 4 or 5. So you're only looking for small little wave 5s up. Your RR when price is here is 0.25 if you put your stop loss at your break even, right? So this is your trade. Price is currently at whatever, like somewhere in this range at 97 something. And you got to think, well, do I want to stay in, risking potentially moving back to a 618, or do I want to try and get a little 25, 0.25 R? I'm happy to just exit and then just look for new local opportunities here, knowing that I am looking to exit quick because I'm looking for wave 5s to end and start a retracement. Third wave always have to have the highest volume? No. The only rule is that wave 3 cannot be the shortest wave in an impulse. Right? So you have your wave 1, 2, 3, 4, 5. The only rule with wave 3 at least is that wave 3 cannot be the shortest compared to 1 and 5. The other 2 rules is wave 2 can't take the origin of 1, and wave 1 and 4 are not allowed to overlap unless it is a diagonal, but not in an impulse. Wave 3 doesn't need the highest amount of volume, but most commonly, wave 3 has the highest amount of volume. And that is why when you see a structure that has a high amount of volume coming in, right? Look at the volume, right? And then here we start moving up. That's this section. Preferably, therefore, that is your 3. And you still look for 4 5s. So, yeah. In an ABC, however, right? So now we talk about a corrective structure. It is actually quite common for wave Cs to have a lot of volume and be very quick, right? Like very, very quick wave Cs. You have like a small A, B, and then poof, a wave C. That happens. So you got to be aware that the moment volume comes in, you, at that moment in time, of course, look for a wave C or a wave 3. And then the next range, because also a wave C needs a little bit of time to cool down, right? A, B, C. Inside C, you still have a 1, 2, 3, 4, 5 wave structure. So generally, you still see a little bit of this, right? Curvature, and then eventually you move around. But this is, for me, a great like exit area, unrelated to just what you see on the chart in the background, just from an Elliott Wave point of view. Because if this is a C, we go down. If this is going to be a 4, I know I have the skills to re-enter. And if I miss a wave 5, or if I miss a move to the upside, I don't care. There's going to be a new opportunity, you know? Always going to be a new opportunity. So, yeah. ABC versus impulse to the upside depends on the wave 4 you get later. So this is your bullish scenario. Right? Of course, then your wave 2 would be here. And then your zigzag is actually the same structure. The only difference is an impulse has another 4, 5. So yeah, just got to wait for price to range again and then count the 4s and the 5s. And then we will be able, if we're looking at a C or if we're looking at an impulse. So it will make life easy. On a 1 hour time frame, the volume is increasing, I think. Yeah, it's a little bit higher. Holy. Wait, I actually need, I rarely ever use this. Which one was it? That one? Yeah, okay. Number 2564, 2573. Okay, so there is more volume in the recent move to the upside on the 1 hour. On the 15, it's a bit more clear. Right? So therefore, you preferably count a 3 to the upside locally, right? So you preferably look for at least a 3, 1, 2, and then get your 3, 4, 5s. And then the question becomes, is this going to be C or is this 3? Oh, we'll find it out, no? Is an extended 5th wave rare? Yeah. Compared to 3s? Yes. It's a lot more. I have a tip to share for that as well. So the answer is yes, but on very high time frames, it is actually, I don't want to say more common, but on a very high time frame, like a weekly, monthly, yearly chart, it is more common than general to get an extended 5 because of the amount of people that get involved with that market in that period of time. You're now talking about such a long period of time that as that market is growing on a weekly or monthly time frame or yearly, and you start to create your wave 1 and 2 and 3, that by the time you're in a wave 4, so many people know about it that the volume in your 5 and the participants in your 5 are going to be so high that your wave 5 can be your blow off top, which then is your extended 5th. Yeah. So on the very high time frames, it would happen more often to see an extended 5. On lower time frames, it's not common. No, you generally expect wave 3 to be the extended wave. Yo, what's up, Siamak? How you doing? I see. Oh, it's Solana. Yeah, I should make videos about them. I made a video about ETH and I made a video about OM. Yeah, Mantra. They're in the altcoin playlist. I will make some stuff on some other altcoins. When is the book going to be released? It should be in June. Are you a longer or a shorter? I'm like an average kiddo. I mean, of course, in a bull market, my percentage longs are higher, but generally I'm very normal on my longs and shorts. It's a bit market dependent as well. But I am very happy to short. I'm very happy to long. Do you trade with prop firms? I used the prop firms to also build my personal accounts back in the day. I haven't really used prop firms in a while, but I used FTMO back in the day for a bit. I heard recently, I don't know if you guys, I heard recently in the Discord group about Breakout, which is from Main and Cred, I believe. I don't have experience with it. I don't know if it's good or bad or whatever, but it's from other creators. And I got a message from he's called Rob. It's Telegram stuff, and they were like, "Hey, do you know Breakout, and would people in your community use that platform? Yes or no?" Now, I only want to partner with platforms and stuff that I actually use, which is Blowfin, because I use Blowfin, so that's why it's the only exchange in the comments and the pinned comment usually. I don't trade anywhere else. Because I serve what I eat, if you know what I mean, if that's a saying in English. But if I would consider doing a prop firm partnership where people can get challenges for cheaper and stuff, then I need to know what people like. And some people were talking in Discord on Breakout. FTMO is always well known as well. So those would be, potentially ones that I can have a look at. But then I want to use them myself as well, because I don't want to serve something I don't use, if you know what I mean. I want to be very good and solid with the channel. I get lots of emails with advertisements like, can you do this coin? Can we buy you a video on your channel and all of that bullshit? I don't do that. I don't want to get into that. It destroys the viewing experience for you guys. And of course, there's money to be earned with all of those ads and all of that stuff, crazy money. But I have never said yes. So, yeah. Do you only use volume for indicators? Yeah, pretty much. Unless you also maybe use PVP to find daily naked point of controls with the PVP indicator, right? Which you can using day, week, or month for weekly, monthly, or daily naked point of controls. Or you can use market session volume profile by Leviathan, daily, weekly, monthly, maybe even yearly. But generally, I just use volume, and I use ATAS to find my daily naked point of controls. Do you trade smaller waves with leverage? I always have my standard setting is leverage anyway. I always have either 5 or 10x, usually 5, as my standard leverage, unrelated to the time frame. But I don't use the leverage, big difference here. I don't use the leverage to increase my risk. I actually use it to decrease my risk. So when many people think about leverage, they think about, I'm going to go 10x balls deep and risk a high, risk more money. But it's not a sensible usage of leverage. Of course, everyone has their own plan. But in my case, right, if I want to risk 1% per trade, okay, and there is a setup. So this is your example setup where the stop loss is going to be 1%. Perfect. So if I want to risk 1% of my portfolio size and the stop loss is 1% away from entry, then I can enter with 100% of my portfolio size. Whatever that is for you. That can be your $100, $1,000, $10K, $100K, 5 million, doesn't matter. You can enter with 100%, and if you enter with 100% of your portfolio, you only risk 1% because your stop loss is 1% away. However, that means that I do not have any money to put in other trades or use it in any other way, right? It also means that if I identify my trading portfolio size as 500K, but I don't want to put 500K on an exchange, I actually just want to put 1K on an exchange, 100K on an exchange, and leave the 400K in the bank or another investment or whatever, right? Your trading portfolio size is still 500K, but you put 100K into your exchange, right? Which means that if you want to trade 500K for risk, because of course 1%, that's going to be your, based on your 500K portfolio, right? So that's 5K. Oh, so your 1% is going to be 5K. But if you have 100K in your account, right, you need to use 5x to risk 5K with a 1% stop loss. Know what I mean? So that's a little side story, I suppose. Now, if the stop loss is, of course, at 0.5, I need to use 2x in order for me to enter with 100%, the stop loss is at 0.5. If I want to risk 1% of my portfolio size, I need 2x leverage because it's lower than 1%. So now I need leverage to risk 1%. Without leverage, I cannot risk 1%. Without leverage, I'm only risking 0.5%. But that's not what I want. I want to risk 1%. So now I use leverage to manage my risk. And then, of course, on the other hand, if your stop loss is 2%, well, in that case, right, I can enter this trade with 50% of my portfolio when my risk is 1% and my leverage is 1. Because my stop loss is 2% away. So with 2% stop loss, I can risk 1% of my portfolio on 1x leverage if I put 50% of my portfolio size in. And then I have another 50% on the exchange to do whatever I want. Now, my standard leverage is 5. I don't know, it's just comfortable. I just always use 5. So my standard is 5. And it makes me, I don't have to think about changing my leverage per trade and whatnot because I know I'm solid. I'm good. And I can trade trades that have less than 1% stop loss or longer than 1% stop loss, or it just avoids me to think about the leverage. So and my liquidation, of course, even for big swings or whatnot, is more than far enough. So yeah, I don't really. So I use leverage as a tool to manage my risk. I don't use leverage to increase my risk, which is a very big difference from a trader's mindset point of view, right? Mm-hmm. I shorted 90.4K. Am I cooked? Yeah. Hopefully not, but it's difficult, of course, to see price moving against you. I'm not, no one can foresee what happens, right? And if price comes back to 90.4 or reverses or whatever, but from an Elliott Wave point of view, because that's all I can do, I'm not a financial advisor. The highest amount of volume is currently in the most recent move towards the upside, which is generally therefore counted as a 3. And you would still expect wave 4s and 5s. We are at the point of control. I don't really have any resistance here besides that 92, 93. Yeah, I can turn everything on if you want. So 92.5. And besides, of course, like, yeah, price can range here, right? Maybe it rejects. We don't know. That's all probabilities, but probabilities would be higher to still see price climbing from an Elliott Wave point of view. Will you first retest the point of control to get out at break even or maybe little profit? Hey, no one knows. No one knows. I think the biggest question you got to ask yourself is, what's the plan, right? Why did you enter here? Where is your stop loss? Where is your profit? What was the plan? Stick to the plan. Right? And preferably the plan is based on data as well. So you build some statistics. Well, Danny, Yeah, it also relates to how far a potential 3 is going. So Danny, if the 3 is not as impulsive, goes as far as you really want to see, then you got to think about a zigzag, yeah. So hit the 1 to the 1.236. We're still below that, right? I'm not sure are you talking about a zigzag here? Because in that case, you hit the minimum target for C's, which is the 0.618. That's where you are now. Your most common area is higher. It's all the way up here. In that case, you would then have 1, 2, 3, get a 4, get a 5, finish, and then you look for rejection. Double zigzag. Yeah, I mean, but then A, B, and your C is, of course, relatively short, and preferably this is wave 3 of C in a bearish scenario. So you still want to see 4s and 5s. So preferably it then still climbs a little bit. Even if you would look at the smaller ABC for a double zigzag WXY. Because your W then needs to start here, right? ABC, correction, ABC, wave Y, turn around. Now, how do you count the current impulse after the range? So currently highest volume is here. Preferably we count that as a wave 3 because of it, which means that if this is counted as a 3, this has to be counted as a 2, meaning this then is your 1, 2, 1, 2, maybe 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. So therefore, after this whole range, 3-wave structure, right? You get your 1, 2s, 3, 4, 5, or sorry, 1, 2, and then that's your 3, couple of 1, 2s. Being wrong needs to be part of that plan. Yeah, you need to know where your stop loss is. So if you executed your short based on your plan and it turns into a loss, it's no problem. Because you know based on your data that if you just keep executing that same plan over and over again, you're going to be profitable at the end of the day. But it doesn't guarantee you no losses. Every trader will have a loss at some point, right? So if your plan has a win rate, as an example, let's do it typical. If you have a 50, 60% win rate and your RR is 1-2, you're going to be profitable, right? 2-1, right? So yeah, you'll have, now let's do this. If you have a win rate of 50% and your RR average is 1-2 or 2-1, 2 profit, 1 loss, you're going to be profitable, but you're going to lose 50 trades over 100 setups. So that just brings it into perspective, right? So the question is, did you trade according to your plan? And if you did and it's a loss, it's no problem. But if you traded without a plan or outside of your plan, that's a problem. So it is a good trade, even when it's a loss. It's a good trade if you followed your plan. But if it's a loss after you did not stick to your plan, it's a bad trade. And those are the ones you want to remove. Chili Hills Burgos. I've lost 2,500 today. Is it possible to get back with 300 in near days? First of all, of course, challenging time, right? Of course, feels very bad to lose money, unrelated to if it's a lot for you or not for someone else, right? It's still it might be a lot for you. It's not great, but be aware of the potential of revenge trading now. So if you only have $300 left, you're not gonna make your 2.5K back with good risk management and good trading in a short amount of time in the near days, right? So I think what is a more sensible approach, which might not be, it might not be aligned with your feelings, because the feeling is I've lost 2,500 and might have 300 left. You might think I want to make it back as quick as I can. The problem is if you have 300 left to make 2,500, you need to, of course, basically 800, 700x your initial investment, which is not, you can't do that with responsible trading. So instead, I recommend the money that you have, just put it aside for a second, analyze what went wrong, because you made a mistake here on Sunday evening with a short and price went bananas. So identify what went wrong, right? So why did you enter? Why did you not have a stop loss? What was the plan? Just analyze the mistake so that you won't make that mistake again. And then just start trading with the remaining 300 from a normal trading point of view. So have a stop loss, have a TP, have a plan, risk a sensible amount, right? 1%, 2%, 5% max, but I wouldn't go bananas with that one. So that would be my approach. So primarily will be analyze what went wrong. If you don't have a plan, by the way, then preferably stop trading for a bit and work on creating a plan, right? A lot of bill loans. I'm on a pressure and want to get out as soon as possible. Oh. Only trade with money that you can lose, of course, is usually rule number one in the industry. Is it possible to have multiple plans? Yes. I have multiple plans. But cheers, Dimitri. But now, of course, you get pressure from real life on top of the loss as well. Like you may have used money you can't lose to trade in order to get more money to pay the bills or something. Should take the reverse button. Yeah, so okay, so here is my approach. Here's what I would do. One, work over hours or side jobs to earn more money. Do not use that $300 with oversized leverage. Instead, use it to trade responsibly, but because you only have 300 left, there's no way you're going to gain 2.5K in a responsible manner. So I just want to make you aware of revenge trading, because you're going to lose that $300 if you go into revenge trading with high leverage to try and make that 2.5K back. There might always be an opportunity, like maybe you risk with the $300, maybe you're going to go balls deep into a long or a short and it works out. You get the money and you're happy. But what if you lose it and then you have zero in your account and your risk management is very poor, your trade management is very poor? So is it worth the risk, right? I mean, from a solid trading perspective, not really. So I probably be like, yeah, shit, I need more money. Can I somehow get money somewhere, right, in my environment by maybe doing another job in the evening or maybe during the weekend, get some extra funds to grind towards the 2.5K, to pay the bills, not trade with money I can't lose. Because if you can't trade with money that you can't lose, then shouldn't have been in the market anyway. You know what I mean? So, and with responsible trading, like charts and stuff says as well, like if you risk 1 to 2%, it's going to take ages before you make 300 into 2.5K. That's going to be a very slow progress. So, yeah. So the leverage doesn't matter. It's the risk. It's the way you risk your trades. But yeah. that's probably how I would approach it. And of course, I don't know if you have a full-time job, if you're a student, if you're an adult, if you're, well, I don't need all that information as well. That's not up to me. I'm not an advisor. Unrelated to your situation, I'd probably go and try and find a way in real life, not the chart, not the market, but find another way to get money and like a job and just get something, right? Like that way. Because I don't want you basically to lose your remaining 300. I'm very afraid now that if you go back in the market, you're going to go into revenge trading to try and make 2.5K back. But by doing so, you're going to lose the other 300. Because if you don't have a clear plan, which you didn't have because you had a big loss, much bigger than expected, so something went wrong there. If you don't have a very clear plan, preferably based on data, with good risk management and trading psychology, it's not going to happen to get it back. Because if you go in balls deep now and you go long or short or whatever, every tick up is happiness. Every tick down is, oh shit, there goes my 300, you know? Yeah, of course, I feel sorry for what happened, right? I mean, it's never fun to lose, but let it be a very important lesson, I suppose. And I hope you're going to get it back in one way or another quick, but I would not try to get 2.5K with a $300 account. So, yo, Sibel, why I didn't... Sibel, how long are you live now? 2 hours and 40 minutes. Sibel, if you're in Discord, right? If you're in Discord, you can go to the reaction roles, click on this button, and then every time content is posted in the Koen's content, the team is tagged. So you always get a Discord notification. YouTube might not always post notifications because of the amount of content. Wait, Nutrition Trader, look, I wasn't yet at your message. I was answering a very important message. We should give you presents, man, instead of you giving donos. Yo, today, everyone, is the birthday of Nutrition Trader, someone that's been around on the channel for a while already. I wish you health, love, and rising Bitcoin. Nutrition Trader, congratulations. Enjoy your birthday. Hopefully you have a great day with some cake, right? Some sweet stuff. Maybe your family, your friends, and of course, man, for the upcoming year and the many years after. Wish you good health, love, and very well-filled pockets as well. So take care. Treat yourself today. Cheers, man. Thanks for the 2, dude. And also, I appreciate you spending a little bit of time on your birthday in the live stream. Like, how cool is that? Like, I can imagine there's a lot of things going on, but thanks for popping in. Thanks for being here and being part of the live stream on your birthday, nonetheless. Cheers, man. Oh, what a guy. Matthias, welcome back. Good to have you here again. So when Matthias joins, he always says from Argentina. There's no message, no first message of Matthias in any of my live streams where he not says I'm from Argentina. Danny Dijkhuis, was there a message that I missed? Also, by the way, with Burgess, the reason why we are creating a platform to help people create a plan, which is going to be called Hexaplan, more is because of this. So people can trade with a plan, data-driven, and trade responsibly. Yeah. And then they journal and keep data and stuff. It's going to come. Need to catch a market or going to safer bet is consistency. Yeah, exactly. Mila, 93.94. We're almost at 92. Based on the structure to the upside, I would probably look for higher at the moment. So if we are moving into resistance with this speed, I'm looking for price to move beyond it. Because what we of course want to see now is, right, like, so, I mean, let's just focus on the recent impulse. So here you have your grind, right? Your 1-2s. This is your quick move up. We eventually just want price to slow down, create a couple of 4-5s. The thing is that if you're going to move with this steepness into resistance, chances are higher you're going to have maybe a short rejection, but that you're eventually going to move beyond and move to 96, 97. I don't really see price move straight to all-time highs. I said it a couple of times during the stream, but I don't really think there's enough 1-2s to get a push all the way to an all-time high. So, of course, if you want a very, very big move, you prefer 1-2, 1-2, 1-2, 1-2, and then boom, and then you get a very big 3. It's like we had here, a couple of 1-2s, and then poof, and then you go. I'm not really confident there's enough 1-2s to go straight up. What I would like to see is hype, emotion, short bear market finished, la-di-la-di-la, people buying at higher prices, 96, maybe 98. We have some resistance, 102, 105, I don't care. Instead of just doing this, which is too easy, unless you swing failure to all-time high and then drag it down, that would be quite cool. But I'm not looking for a straight line. I preferably still wait for, or wait. I'm in a long. I'm not waiting. But what I would like to see from an Elliott Wave point of view, even for the bulls, if a low is in and you do look for continuation, I would like to see still a bigger move down to create fear and, oh shit, oh, lower high. It's like the same as the 73 range here. Lower high, lower high, lower high, right? So it's not too obvious. Or if it does go straight up, then probably swing failure all-time high and just drag it straight down again. Grab the liquidity, fill the big positions to the short side in that case, and then just drag it down and go stop loss hunting. You know, find the liquidity to the downside again. It would make, I suppose, a bit more sense to me to not take all-time high. The amount of 1-2s I think are not really sufficient. So yeah, we get the 3 up and then get a couple of 4-5s and then turn around, which would make more sense to me. And then the move to the downside will decide, you know, what's next. Bear market, bull market. We'll know. We will know. We will know. We keep an eye on the chart. Are you live for any longer? Probably not. It's been almost 3 hours, so yeah, probably not gonna be here for much longer. Seabell, respect, yo, Seabell. Too much cake. Sure, they're not made serious and down earth traders like you. Appreciate you shout out and as a small YouTube trader. Let's have a look, yo. Let's have a look. Nutrition trader. Go to the channel. There we go. Hey, he's live. Wait. Automated FTMO trading. This guy, he's live on YouTube, yo. I just wrote in his chat. Yo, what are you doing? I 10K starting challenge unautomated. So what's the jizz here? What are we doing on so it's the birthday of Nutrition Trader. You know, before I click sub, I need to know what it's about. What it is about. I see a bit of Elliott waves. I see some counting. Order flow. Started a couple of months ago. Hey. So this is the channel of Nutrition Trader. Where is he? There he is. And it's It's his birthday as well. He has French schimmelkaas now. Yeah. Yeah, it's his birthday. Hey, who knows? Maybe for some people, what you see here is going to be very interesting to your style of trading. I don't know. I don't know. There, you got a good. Is this your beat? Yeah, you do have a beat going, man. I do Elliott Wave and automated trading, AI trading. Now that's. I'm gonna check out your channel after the stream. That's very interesting. I don't know anything about automated trading. I've never used a bot. Okay, I'm gonna check out the channel later. Have a look. Yo, cheers, Mark. I'm gonna have a look, and then I'll check some of the vids, see if there's a +1 subby coming. If you were not in a long, you would just wait for a grind and short the retracement. Well, currently the local trend is up, but if I am not in a long yet, what I prefer to wait for, it's personal, but I would like price to hit the resistance, create a 3-wave corrective structure. This will give me an opportunity to enter the long, minimum target, take out the high with the potential of moving to the next resistance. That would be my next opportunity. So what I don't want to do, if I wouldn't be in a long, what I don't want to do is long straight into the highest candle that then starts the range. And then I'm like, oops. Of course, currently volume here, right? Price is moving, volume goes up. That's nice. Of course, one could enter here and look for resistance, but where do I put the stop loss? Yeah, maybe below the point of control. But that's like what? That's like a 1R or something, right? There's not a great. It's 1R. I mean, 1R is 1R. But what I prefer to see, I don't like to enter in pumps or dumps. I either enter before or not at all, and then I wait for the new range to form. And the new range will tell me what to do. So what I prefer to see is price to slow down, right? Curvature eventually goes a bit sideways. And then based on this structure, I will enter my long. Okay. So, yeah. Oh, wait, I'm still having music in the background. Nice vibes, though. Nice vibes. Cheese plank Koen Gouda. I know. I do like a good cheese plank, though. So do you think Bitcoin won't take out the low? No, I mean, on a high time frame, probabilities are not yet geared towards the bulls on an 8-hour. But even in the bearish scenarios, right, we're looking for price to move up, no? So in both, that's of course an ideal scenario. In both the bullish and your bearish scenario, we were looking for price to move up. So that is what if I clean up the chart, in your wave X, you want to see a move up, right? In your wave B, you want to see a move up. In your bullish scenario, you want to see a move up. So you're looking for the move, and the only scenario was the potential of a diagonal, but yeah, not now invalidated, right, as well. But even with a diagonal, one more low, still turn around and look for up. So I mean, bias up, also according to this video. I really recommend this video. I talk about it a lot, but I think it really makes Elliott Waves so much simpler for people to trade. I think it really helps. Oop. Cheers, DK. Thanks, man. 48 plus. I like all cheese. Yeah, it's tasty. Tasty. But he has French schimmelkaas. I don't really like the blue cheese and stuff. Some French cheeses are nice, though. 4 years of trading, still not consistent. Coded myself. Okay, interesting. Well, let's see. I mean, maybe at some point you don't really necessarily need to be able to trade consistent yourself because the bot is doing it. Well, that would be something. What's the most probable scenario? How long would you need to decide your short? Still waiting for 96K. What's up, Parham? At the moment, probabilities are highest that this is your a wave 3 because of the volume. Now, because of the volume, there is two scenarios I like you to think of. Your bullish scenario, right? So currently you're in your 3, you get a 4, 5, 4, 5. So 2 more 4, 5s. Alternatively, you have not that one, too many scenarios. This one here, 1, 2, 3, 4, 5. Only 1, 4, 5. Then we know more. Do you get another 4 and 5? If yes, you look for an impulse. If you do not get another 4, 5, and instead you get a deep retracement, ABC. If you get an ABC to the upside here, that's bearish. And then you would look for price to take out the lows, most likely. So yeah, it's interesting times, no? And with regards to the short, well, how long would you need to decide a short? Oh, that's not going to be today. I don't know, based on the price action, maybe at the end of the week that I might look into short. So what I want to see in order for me to take a short is price needs to calm down. So it needs to start grinding, get the 4 5s. The moment we start getting ranges again and some 4 5s, right? So probably your first range is not going to immediately be the high. You're likely going to take it again at least once. So I want to see a bit of sideways price action, and preferably this sideways price action is moving into one of these resistances. 98K, I have some resistance, or 102, I don't care. But then I'll become interested to look for a short. Alternatively, if you touch some of the resistances, right, I need to like hit something, and then I can observe the rejection. So if you get an impulsive move down and a corrective move up, maybe some bearish CVD and whatnot, yeah, it might be interesting. But we're still in a local uptrend. So even if I would go short, it's very tightly managed. I'm not looking for swings at that moment in time. So the first 4 5, I need to see a couple of 4 5s, right? So we have the 1 2s, you get your 3, right? Wait for a couple of 4 5s and then look for price to turn around. Bearish scenario is not invalidated. How do you calculate C target for the recent move up? By taking a trend-based fib extension from this low to this high, and then either that low or that low. I actually use both, funny enough. But for a zigzag, this and this one, the 1 and the 1.236, right? Taken from start of A, end of B. However, what I like to do to make the target area a little bit bigger is the 1-to-1 fib, trend-based fib is taken from the start to the end of A to the lowest point of the range. The 1.236 is taken from start of A, end of B, which is higher. It creates a little bit of a bigger target area. Yo, cheers, nutrition trader, man. Thanks for being here. I saw a message from Sibel as well. From where did you long? 1 second, let me check my. I'm not sure if I opened the browser, because on Mac, what I find annoying is if I click on the Google logo, I don't see the tabs opening, like to the upside. So I guess, and I never know where it opens, but I entered my latest long at 88.822, which is just before the breakout because the 886 was touched, which was right there. Lol. Breakout trader? No, that was Elliott Waves. I had a long here as well before. So I had one long here because the 886 was touched, 3-wave move down confirmed, and bullish CVDs, but 886 here. So that's, and then overnight it went up, and then price started ranging here, right? But then 5-wave structure. So I eventually exited because there you go again, quick move up, starting the range, I exit. And then this was during the night, and I wasn't there. I didn't have enough confidence yet. We were looking for the potential of a flat. But then earlier today, 88,822. When price touched the 886 here, I was looking for price to take out the high and then observe. Yeah, now we are all the way there. So yeah, nice. Very nice. And also, like looking at this structure from an Elliott Wave point of view, right, starts to be quite long to the move down. Very grinding. Yeah, bullish CVDs. Oh yeah. I know. Cheers, Dimitri. Old cheese is great, yeah. Old Amsterdam, yo. Do you think at some point it will take the 74K bottom? I mean, there's still scenarios that lead to that low. Absolutely. So there's no, like when a low is formed and price moves to the upside, I mean, people love thinking very big. It's very dramatic in the industry. I'm not really a dramatic person, but people always think about, oh, we go to all-time high. Oh, it's bear market. It's never in between, right? Oh, we get a bounce. Cool, all-time high is next, right? Oh, we are like going down for like some weeks already. Oh, bear market, bear market. I mean, huh? Take a chill pill. So, yes, there's definitely scenarios where you can still take out that low because the bulls need a 5-wave structure here, which we don't have. And you need this 5-wave structure, preferably before the all-time high is taken out. But you need a 5-wave up and then a 3-wave correction down. This is where the probabilities then change for the bulls. Because this move up was also necessary in bearish scenarios. So in a bearish scenario, you were also looking for price to move up. It was the same direction. Right? You can even hear me talk about it in this video here as well, without even counting the chart, looking for a move up. So yeah, and now we got to move up, but this can still very much be a 3-wave ABC. With this move up, there's no guarantee it's an impulse. So yeah, if this turns into an ABC, oh yeah, you're going to look for price to move down again. No. Also, the bulls might actually want to even look for a double 1-2. 1-2, 1-2, and then go. Where this is not counted as a 3, it's counted as another 1-2, 1-2. So if price would reject at resistances, right? What the bulls want to see is preferably a little bit of a deeper retracement, not as shallow as here, but a bit of a deeper one, 3-wave corrective structure, right? Which invalidates wave 4. This is now advanced Elliott Wave Theory, okay? So ask questions if you may not get it. Happy to help. But if this is a 1, 2, and then you have your 1, 2, 3, 4, eventually we get this, and then we have this. Ooh. So 3, 4, 5, 3, 4. So this is an impulse, right? Traditional 1, 2, 1, 2, 3, 4, 5, 4, 5. However, in a multi-1-2 scenario, you would like this wave 3 to be another 1. This wave 4 preferably gets invalidated. And then everyone's like, oh, potential for an ABC. So you want this wave 4 to move. Oh, that was the wrong low of 2 to wherever 3 is going to finish. We don't yet know. But then the 618 is the invalidation of 4. So then you want to see after this high is made, you want a deeper retracement, preferably invalidating a wave 4 would be nice. I mean, it would give clarity. We'll see if it does. And yeah, then you got to be aware. Then your bearish scenario is ABC. Your bullish scenario is multi-1-2. What I do generally like to see though with a multi-1-2 is overlap between your first 1-2 and your second 1-2, which is difficult because this wave 2 is so incredibly shallow. But yeah, it happens. You don't always get overlap. Like when we moved up from 39K here. Toggle on the volume. So yeah, you have your 1, 2, 3, 4, 5. I mean, that was easy. You start ranging here. This is another one. This is another one. This is another one, right? And then eventually you explode. But you can see the highest amount of volume, right, is sits here. So you're still building some smaller 1-2s. They don't always overlap. There's another one, I believe, that didn't. So there's, I mean, I did overlap. So this is also a 2, right? But it does overlap here. So, but yeah, preferably your 1-2s overlap, which is a bit of a challenge with this local price action. So therefore, it would be, it wouldn't be a nice 1-2 for the bull. So if you do move down and invalidate a wave 4, an ABC arguably takes some higher probabilities than a multi 1-2, but you got to be aware of it. But an ABC is still very much on. And if you form an ABC here, a zigzag with a very shallow wave B, and honestly, the fact that this range is super shallow compared to the move up is something that you do. It's very rare for wave 2s compared to corrective structures. So something to keep in mind, I suppose. But in an ABC, yeah, when C is finished, you look for price to move back down, and then likely you take out the low. Yeah. But we have time. We have time. Like probably, I mean, we are currently Tuesday, 5 p.m. How long was this prior range? So in other words, right, if this is your 3, you're still looking for 4 5s. Where's my point of control? There you go. So if that's your 3, you still want to see 4s and 5s. Oops. This would be a 2, another 2, another 2. So you have like 1, 2, 1, 2, 1, 2, maybe a few small ones, 3, and then you get your 4 5s and that. So if we take a fib time, when would we start ranging? I mean, maybe, let's just put it on the candle. 1 Thursday. So what I'm doing now is you have your like 1, 2, 1, 2, 1, 2, couple of 1-2s maybe locally. You get your 3, then you get your 4 5s. Generally, your 4 5s take more time than your 1-2s. So what you can do is take a fib time from the start of your 2s, right? Like the end of your first wave 1 to the end of your like last wave 2-ish. Assume it's somewhere there. And then preferably you start eventually creating 4 5s that move at least beyond the 1. But in this case, it would be nice to move beyond a 2 or a 3 because every wave 4 compared to its wave 2 is generally a little bit longer. So in that case, you might create a top by the end of the week. And then when it is weekend, either you make it just before or just after the weekend, kind of Saturday, Sunday. No, I mean, preferably you make a high before the weekend so that the weekend is a weekend range. For an impulse, though, the weekend could be a wave 4, but preferably in an ABC, you finish it before the weekend time-wise. Wave 4 has just started? Yeah, possibly. I mean, yeah. I don't know. I don't really have any great resistance where price is now. I know there's a value area high. I don't know exactly what the volume profile was. No. Oh, no. No. Not a value area high. It's just support resistance, I suppose. But I don't really have a horizontal level. So of course we are now, it's important level on the chart. But I do prefer horizontal levels. 618 extension. Oh, yeah. I mean, are we... No. Yeah, we are at the minimum target for a wave C. That's true. But preferably because the highest volume is in this move, you still get a couple of 4-5s, and these are your 1-2s. Even in a C. These can end on high volume, so you got to be aware. Yeah, we didn't hit any of my levels though. Ooh. Jeez. I gotta go soon, yo. Got something to drink and continue the day. Got to email my accountant as well. He's waiting for stuff. Yup. Wait, new member. Braloka Pavil Veyer. This sounds Nordic, no? Maybe Norway or Norway, Finland, Sweden. But yo, Braloka, welcome. Welcome to Silver. Make sure to fill in the form. Let me get it for you. Or one of the mods has it quicker than I have. Iceland. So just, Braloka, make sure to fill in this form and we will get you sorted very soon. Welcome to the Silver team. Welcome to the Silver team. The answer, Parham, is yes. But the structure to the upside at the moment decides. Raging bull mode. Of course, when price is moving up as well, like there's always that initial phase once price starts moving of almost like disbelief in the market and people hope it goes lower, but you gotta trade the chart. So even though Elliott Wave scenarios can lead to another low, you got to be aware that, hey, if price is moving up locally, right? Like we made a low here, price highest probabilities was anyway, even in bearish scenarios, higher to move up. Might as well be part of the move. Because if you do create a low here after a WXYZ or a C, it doesn't look nice, but still, you might as well be part of the move. And then at a later stage, probabilities turn bull, and then you're like, all right, well, at least I got this move to the upside, wait for the retracement, join again, and move further up, instead of waiting and waiting, right? Well, when people are here, it's like, we take the high again, we go up and up and up, but you got to be aware of, probabilities. Yeah? And then once price starts dropping, that's where people turn around a bit too late. So don't be married to the emotional or the thought of. So the probabilities are better for bearish continuing the correction. The bulls don't yet have the highest probabilities, but they may get it if you do get a 5-wave and then a 3-wave correction, or you're going to build multiple 1-2s and then you fly, right? And then probabilities change. You gotta be able to change them according to new information. But even if probabilities might be higher to continue a corrective structure, you can still trade in the direction of the move up. No. So just trade the chart. Trade what you see on the chart. 618 extension of ABC. That's where we are now. What's your current favorite scenario with the highest hunch you have? ABC as part of WXYB. My hunch would be I think the most interesting and arguably more scary structure would be a zigzag ABC with a diagonal A. But based on data, it's quite rare that wave A is a good diagonal. I mean, you may have actually one here as well, but that's the data from Rich Thwennell. It's not my own data. I don't know, I can't give the highest probabilities to a WXYXZ. So that would be, here you need wave X, finish wave X. Wave X can also be counted as a flat. I know it's a WXY, but this W can also be A, B, and then C, and then create a 5 wave, right? 1, 2, 3, 4, 5, and then get impulsive move down. So that's why it's so important. Even if you get an impulse up here, it's no guarantee you become bullish. It's the retracement that decides. Fear and greed index 38. Too high. So yeah, my hunch, I mean, I just follow probabilities, not really hunches. And they're at the moment still higher for a bigger corrective structure. This move up was expected though. And then if probabilities change, if you do get multi 1-2s here or 1, 2, 3, 4, 5, you need that 4. And then a corrective retracement, then yeah, we'll switch. But at the moment, there's not really a reason to. WXYXZ remains rare. I don't know, can't see it as a highest probability at the moment. People open short like there's no tomorrow. Gotta love a short squeeze. Yeah, that's also the problem. It's you know, I mean, yeah, maybe they're able to snipe the high, but it's so high risk. Yeah. What is your scenario after the parallel channel hit its target? Well, that would be a target for a wave C. Or you would create another 1-2. The problem for a multi 1-2 is that your first 2 is so shallow. So your second 2 has to retrace super deep to like 786, 886-ish. I mean, that's not great. Oop. Yeah, it says 786. You would reject somewhere here, 786. It's quite deep. Still common, 786 for 2, that's fine, but it is relatively deep in order to have overlap with this range. So initially it will be ABC, then potentially multi 1-2 if you get a 4-5 impulse. It's just this part now is easy. Now it's just waiting. Yeah, this is the easy part. The difficult part is initially knowing that the probabilities are higher to move up, right? But that was well identified with this being a 3-way structure. Looking for price. Remember the video I made about time where I said this high was made after a 6 fib time compared to the move down. So probability is higher to take the high. It was posted last week somewhere. So that's the, I suppose, difficult part. Once price starts moving, it becomes easy because now you can see the volume, you get the move to the upside. Now you just wait because we got to wait for a new range to form, and then we'll know the probabilities once price starts ranging. So we gotta wait a little. 15 minutes away from the gun guy scenario. It's the 29th, no? You mean Samith? Samith had the gun on 29. That's Tuesday next week. Does it increase probabilities for ABC that we reacted at the 618? No, the 618, you would need to end a C at the 618 in order to affect probabilities for the ABC. So generally, if price moves, the 618, the 1.618, 2, 2.618, 3, 3.618 are areas where price shows a reaction. If takeout settings are okay, is there any bullish scenario where we can still get another move up and still be in a corrective move? That would be a diagonal. I mean, or a double. Wait, 77? Wait, if we take our, is there any bullish scenarios where we can still get a move up? Yes. Yes. But then you would need a 1, 2, 3, 4, 5 correction, 77, not a move up. A, B, C, and then you go back down after. Because a WXY double zigzag, this is too deep for X. It really lowers probabilities if wave X goes that deep. For a double zigzag up, alternatively, you need a W zigzag X and then a Y Now W is a zigzag, so Y can't be a zigzag in a sideways WXY. So you either need a flat or you need a triangle, and then you go down after. So yeah, there is scenarios. If you look that direction, the parallel channel. Oh wait, okay, I see. The target was somewhere around 60K, but once that, yeah. So the target depends on the move up. So I put the channel on a potential high here, but if it's gonna be 96, then the target moves up to like 65 or something. Yeah, after a WXY Buckstonis, you would look for all-time high. Correct. After a WXY, you always look for price to turn around unless you get an XZ, but that's rare. So generally, after a WXY, you would look for price to take out the origin of the WXY. That's in Discord, Merck, and in the gold membership group. With all the, that's where we type like chat about gone and that sort of stuff. There's one for 6 p.m. today. Oh, I see. Yeah, maybe that's going to be the end of your wave 3 and then you start moving into 4/5s. Yeah. Den Solo, hunch. Yeah, I'm always so focused on just probabilities from an Elliott Wave point of view. I really don't have a personal bias or hunch. I don't know, the double bottom at 76 or 74. It's yeah, I wouldn't mind seeing it cleaned up, but probability is higher for a bigger corrective structure unless proven otherwise by creating a 5-wave impulse here or a multi-1-2. Well, but we will, in the upcoming days, probably focus more on the lower time frames because that is where the lower time frames are going to impact the higher time frames now. What's up, America? Yeah, this is in the gold channel chat where we talk about all these things. The probabilities. Oh, from an Elliott wave point of view, that's pure studying. So if you study Elliott waves, you will see that if you get an impulse, you preferably see wave 3 highest volume, wave 2 deep, wave 4 sideways, no 2 and 4 overlap. Different elements that fit with an impulse, as well as a WXY and an ABC and a flat and a triangle. And by knowing all of the rules, the guidelines, the targets, the retracements, the volume, the time, by analyzing the chart with all of that stuff, you will be able to basically calculate the probabilities. So it's subjective. But in the beginning, when you just start with Elliott waves, your subjectivity is very high, right? Because your knowledge is very low. But once your knowledge is going to increase, your subjectivity is going down, right? It will always be subjective, but the more knowledge you have and the better you get, the lower your subjectivity, because you'll be a lot more accurate, a lot more certain, just a lot better, in other words. So the probabilities come from what the chart shows, and then based on my analysis, I will know if probabilities are higher to look for a higher low to be taken or up or down, and I know how probabilities change, and you just trade accordingly. But yeah, it's in the end it is subjective, but the skill of the analyst determines the accuracy of the probabilities. Where did you? Oh yeah, I think I should go trading only spot. Yeah, trade safe organism. Someone earlier asked me if I trade spot or futures, or do spot and futures. I'm mainly active in futures. Can this be a WXY? Been a triangle? Not really looking for triangles myself. Probably you mean on a higher time frame. But if you would like a triangle here, then this needs to be A, B, and then C, D, E. The problem is wave A is complex, which is then very rare. Plus, this is only A, you're working on a wave B, which makes it too early to think about triangles. So it's too early to give it any probabilities. Plus, wave A is complex, which is very low probabilities. Okay, everyone, it is time for me to wrap it up. And continue with today. I'm still in my gym clothes. Like I came back from the gym immediately, poof, opened the stream, and there we go. Still need to like actually like eat some stuff for after the gym and blah. It's a bit delayed now by 3 hours and 22 minutes. Gee, solid stream, eh? Okay. Yeah, good stream. Thank you for joining. Thank you for being here. I appreciate that. Hopefully you enjoyed yourself, learned a thing or two. Lots of education in this stream as well. Lots of explanation, answering questions, and all of the good stuff. So thanks for participating and being here. Cheers, Mark. And yeah, we'll see where price is tomorrow. If there's anything interesting, then you'll be the first to know, because I will be posting a video. If price is just going sideways, then we'll see. Maybe do an alt or something. But yeah, we'll see. No, we'll see. So thanks everyone for being here. And yeah, I will catch you at the next one. Also, of course, thanks to Mark, Jeroen, maybe a Band-Aid, Odin, Adam, all the mods. So cheers, everyone.